Y'all be making me treat y'all like we're at church. Be seated now. Pass the tides bucket. Okay. I'm going to pass the mic to each shark, and each one is going to say who they are, kind of like what their business is, what they do, and then from there, we're going to get into Investor Tank. I'll start off with Miss Priscilla.
Hello, my name is Priscilla Facey. I'm a real estate developer from Toronto, Canada. I'm the only Canadian on the stage. I've got 150 homes under development or construction in Toronto area. So yes, happy to see everybody.
Hi, I'm Kiana Watson. I am a real estate broker here in the Metro Atlanta area. I have my own real estate brokerage. We represent primarily developers who are building luxury homes in the Metro Atlanta area. Also have my own online training academy, Agent Tools for Success, where I teach other people how to be successful developers, and I'm also an investor as well. Hi.
Hello, my name is Demetrius Walker. I'm also a real estate developer. I have about 340 units right now preparing to be built. I've been in the game for about 21 years now, and just love being able to help other people.
I'm Terica Lynn Smith. Hey, y'all. Of course, I am a real estate developer and investor and coach. And so I coach many of you here. And, yeah, y'all already know my portfolio. Speak for itself.
All right, my name is Dereik Godo. I have a background in corporate finance. I'm a real estate developer and investor as well. We also own property management companies and a whole array of stuff all under the tree of real estate.
How y'all doing? My name is Marcus Barney, also known as Him 500. Serial entrepreneur, run multiple different businesses, multiple different seven-figure businesses. Got my real estate license at 18. So familiar with real estate and just excited to be here and see what we can do and put some money in somebody's pocket and work together. Let's go.
What's up, family? I like the love. I'm feeling in the room. Marcus Valrosa, so I own a few different businesses, but specifically, my education company helps coaches and entrepreneurs learn how to create a lead and sales system to create predictable revenue. And then we do B2B, where we help entrepreneurs and businesses that are losing revenue. So we show them how to build out the operational system to either plug money holes with process, people, or automation.
My name is Nehemiah Davis, entrepreneur, real estate investor, and look excited about being here.
How y'all feeling? We trapping? Yeah. Just for everybody that don't know, I'm a Wall Street trapper. I primarily just focus on dominating the stock market, helping people build wealth one share at a time. We done helped a lot of people get 6, 5, 6, some 7 figures out the stock market. I call that legal money printing. And so now we've printed a lot of money. Me and my brother Marcus, we bought some land last year. We bought 40 acres of land together. And so, yeah, we're really excited about that. And so now Terica is my sister, and I got this real estate itch. So I got a whole lot of liquid money we're trying to move something around. So whoever we can do a deal with, let's get to the trap, you heard?
I forgot to say, too, Terica is my coach, my real estate coach. So I forgot to put that out there.
Okay, Steph, we ready.
Y'all already talked too loud. Okay, so if Vanessa, you want to make your way up?
Reese. Give her some love. They love each other.
Nah, the love in this room is different. You already got the deal. I don't know what it is, but I want to be involved. Terica, I don't know what you building here, but I love it. Let's go.
Okay, so this is Vanessa. Vanessa, I'm going to read a couple things and then I'm going to turn it over to you. Okay? So, like Terica said, Reese, can you turn me down? I'm already loud. Y'all laughing because y'all know I'm already loud. So this is what we ask investors to submit. So we kind of try to put it up, but I'm going to read this. So executive summary. Built in 1980, this affordable 32-home mobile home park is perfect for consistent rental cash flow. Units vary in size, accommodating both single and multi-section homes, well-maintained common areas for residents to enjoy, sufficient parking spaces for residents and guests, landscape grounds enhance curb appeal. In addition, all units have access to water, sewer, and electricity. Paved roads within the park for easy navigation. A close-knit community where residents often know each other. Mobile home parks offer consistent rental income. Explore rent increases or value add opportunities. The 32-unit mobile home park, how do you say that word? Chilhowie? Thought us Cajuns were crazy with our words. Presents an opportunity for stable income, community development, and potential appreciation. Chilhowie has a close-knit community where neighbors often know each other. The area is known for its serene surroundings and picturesque landscapes. JWRL is seeking to acquire this property between $800,000 and $1 million as a buy and hold. The company is requesting 100% investor funding in exchange for 60% equity ownership. The company will provide asset management and time in exchange for retaining 40% equity in the property for the life of the deal.
That's aggressive.
Vanessa, take it away.
All right, guys. Hello, guys. How are you today? My
Good.
name is Vanessa Bill. Thank you, 70, for doing the overview for me. So today I will present to you a 32-home mobile home park. As you know, often most people look over mobile home parks because they don't see the value in it. But they are gems in itself, just like the one I present to you today. This mobile home has 32 units and has an annual rent of $366,336, with the rents being $954 according to the HUD's fair market rent. People move to Chilhowie's for peace of mind and quiet, so that's assuring that you will have long-term tenants because they're not looking to move because they're settled in. So I remember when, so let me read my vision first. Sorry. I have been burning the midnight oil, guys. I've been up for 2 days. I've been up for 2 days, so we gonna get this done today. Yes. We gonna get this done. Yes.
The annual revenue was
336,332. 336. Sorry. So, do we got slides to come through for everything to come through? The financial analysis? Yes, the financial analysis, please. So, let's get to it. My computer is not moving along like I wanted to, but. Okay, so the property overview, like we said, is 32 units in the mobile home park. Location area developments is the Tri-City Regional Airport is close to it. Right now, they're building a tiny home community in the state of Chilhowie. There are a lot of development opportunities, shopping, dining, and entertainment. The units is 32. The building size is 500 square feet. The number of stories is 1 story for the mobile homes. So I just want to say that the reason why I chose to do a mobile home park is because like I said at the beginning, a lot of people don't see the value in it, and they just see that it's a mobile home and they don't think that it's worth it. It's really a cash cow for real. If you really think about it, it's gems hidden. So that's the reason why I chose it. There are over 35,000 jobs in Chilhowie. If you just imagine if we develop communities, mixed-use developments, and that will certainly increase the value of Chilhowie. So here are a couple of ways I would add value to this partnership. As an asset management and as an expert in managing clients, I have managed a successful fashion business for over 15 years.
Though it is not real estate, I have learned to manage clients, time, and the day-to-day work. I can be an asset to management team and scheduling meetings to ensure everything is running smoothly. Living in Virginia, I am able to attend meetings in person and do walkthrough reviews of properties. I am confident I will be successful at providing asset management for support for this mobile home park. I believe hard work, dedication, commitment, and consistency will always win and execute with excellence. So let's get to, all right. So we want to hear the finance part, right? That's here.
Yeah, what is your ask? Go
Mike?
through that again.
Okay. You want me to go through what part, Coach? What am I asking for? The vision or the ask?
No, I want to know what you want for the deal and all of that. Kind of like the summary of what Steph did, but I want to hear from you directly.
Okay. Go back to the executive summary. So Jay Worrell is requesting 100% investor funding in exchange for a 60% equity ownership. Jay Worrell LLC will provide asset management and time in exchange for retaining a 40% equity ownership in the property for the life of the deal. So the property, the ask price for the property is $1.1 million, but I was recommending that we can go for between $800,000 and $1 million to try to negotiate the deal.
How much are they asking right now?
1.1.
If y'all have any questions, y'all can just get the mic.
So 1.1, we get 60%. So what would we?
No, we get 40.
Wait.
You said 60 for you?
No, 60 for you.
Oh, 6 for us.
Yeah.
Oh, okay.
Mhm.
But finance it 100% on us.
Yes, 100%
And then give you
financing.
40. To do what?
To be asset to management of the mobile home park.
To manage it.
Yes.
Could we just hire a management company for 10%?
You could, but
Why
that's
would I give you 40%?
you could hire a management company, but that's what I'm here for. I live in Virginia. I know that you all are busy people. You do a lot, travel a lot. You don't have time to come to your properties and things like that. So by me being in Virginia, I have a lot of access to, because Virginia runs very long. So I have time and I have access to Virginia to do meetings, council meetings, find other developments possibly that we can do business to as well. So I'm there to do just the asset management of that part.
The 6% cap rate.
The 6.36? Yeah.
Tell me how I make money. When I put debt on this, how do I make money?
Okay, let me get to it. Okay. So I'm sorry.
So if I could ask you while you're looking at what ARV do you have? Like, what's your ARV for the property? It probably doesn't need any work. So what do you think it's actually worth? Do you think it's worth the 1.1 it's listed for, or do you think it's worth something more?
Well, yeah, so the AARV, what I got from doing the multifamily calculator, it gave me a 15.20% unlevered and a 24.28% levered.
Yeah, that's for the average annual return. So the cap rate will be a little different. So for a second, if we could math it, right? Cap rate, remember we're talking about market value under or market value divided by your net operating income will give you your cap rate, okay? So we can kind of flip that around and reverse it. So right here, like this net operating income, 233,000. You guys won't be able to see that, but it says 233,000. If we divide this by that cap rate, that'll give us the market valuation that you're accounting for in here, which I think is about 3.8 million. So just trying to back into that number, where did that cap rate come from?
That cap rate came from, it was on the profile of the property with what it was for sale for.
So I think there might be just a calculation thing here. This market valuation, it's showing as 20,000. So I would just probably check that math.
Okay.
It seems a bit off. So the return of 15% and 24%, just from first look, seems about right.
Okay.
That's what I'm saying. I would just double check that cap rate. But if I could back up for a second to the property management. So that 40% has you basically running the whole show, right?
Exactly.
Would we be completely passive?
Can you explain that?
Would we be completely passive, a passive investment for us?
we're not responsible for anything but the money.
Oh, yes, yes, yes.
Yeah. Okay. So I'm gonna poke your numbers a little, very gently. Okay. So we're giving.
Damn.
Yes.
Come
So
on. Let's
so
go.
40% equity, but also you still have 10% in here for property management. So we're still paying property managers $35K a year on top of your 40%. Was that intentional?
It was not.
Okay, I figured.
It
So,
was not.
so I would say that as well as the market valuation probably needs to be reworked a little.
Okay.
From first glances, I do think there's some opportunity here. I have other questions.
Okay.
But I don't want to take the whole time. Does anybody have any questions? Demetrius?
What made you go with this size deal?
Well, I thought that I was coming to. Well, I know that I was coming to the investors' tank, and I'm dealing with some capital investors, and I just wanted to make sure that I present you guys with something that will be valuable and profitable for everyone.
Have you done any type of real estate deal before?
I have not done any investing in real estate deals before, but I was a real estate agent for 2.5 years.
So.
Yes, I was a real estate agent for 2.5 years, and of course I'm in Coach T class, so I'm getting all the knowledge I need. I'm still learning. I'm up here learning now. I'm not afraid to say I don't know. Like I said, I've been burning the midnight oil, poking those numbers in. Dereik, you the man because you know these numbers from the back of your hand. But it wasn't easy. But I stayed up. The sun came up before me, and I was still at that computer working it and making sure that I bring you guys a deal. Yes, I am very determined. I am ambitious and determined, and I was not giving up. This wasn't even the first property that I did. I searched many, and the number just wasn't making sense. Like you said, Coach, if it don't make sense, then it just don't work. So when I was on my way here, I just talked to God. I said, God, it's got to work or it's got to work. Because I came here with determination. You hear me? Yeah, so I came here with a lot of determination. Look, I came here, didn't even know how to use Microsoft. I met Microsoft last night. I don't know how to use it. I see him saying that I know everything, but I am willing to learn, and I learn quickly, and I am dedicated to doing what I need to do.
So if I wanted to structure a deal with you and I said, hey, I need you to come to the table, with some money, would that be something you'd be prepared to do?
That could be something we could discuss. Okay. Yeah. That's right.
So when we talk about investing, I'm going to ask you something is that when you say 40%, and I know I can go get it somebody else at a much cheaper rate, and you don't have any experience in managing a property. So I'm going to put my money and split it with you and give you 40% with experience you don't have.
Right.
You got to convince me a little bit more your value.
Right. So
when you come to talk to somebody about investor, love you.
Yeah.
Y'all don't bite my head off, but
Love
we real
you.
because we going to grow in here.
That's right.
You're going to have to prove your value a little bit more because I'm not giving somebody 40% that's never even did it before because now I'm also going to be responsible for your errors.
Right.
So now I'm putting my money in harm's way because you're going to make mistakes. And then I have to pay for them. So when we look at a deal like that, do you come in and now, is it something that we go, I'm not willing to do 60-40, but it is something maybe we can do 80-20. And we take that 10% off and work that in there.
Exactly.
Would that make sense?
That would make sense because there's always room for negotiation.
No, that is the negotiation.
Yeah, I'm just saying, there's always room for it. I'm down. Yeah, I'm with
Right?
it. You're right.
I do want to go through what he said with the cap rate and things like that and kind of break those numbers down, right? And looking at that return, what's that, when you actually start looking at the numbers, would the returns make sense? You guys are real estate people, right? Because I know I'm... Okay. Oh, so y'all making an offer. Okay, so listen, I do want to look at what the return could be. And I'm going at like this. If we can do, that's fine. It ain't. I said 20% is what I'm willing to do if you're willing to take 20 and I can take an 80. I do want to go back through and look at it and see if that'll make sense. I don't know what else somebody else is willing to offer.
Okay.
Ain't nobody else dug in their pocket yet. You know what I'm saying? 500 dig in that pocket if we gonna make it make sense.
That's right. Make it make sense.
Respectfully, I'm out of the deal.
Respectfully.
I have a question. Have you, as far as what is the condition of this property?
Yeah, so I put in here that I will request a 30-day due diligence, thorough due diligence, so that I can go through inspections, walk the property myself, talk to the property manager, talk to the tenants, and see what things are needed, things that were passed by that they didn't receive in the past, and see how we can improve it to increase the value of the mobile home park.
Was there a rent roll with this, and what occupancy are they at?
It was not a rent roll with it. That will be included in my thorough due diligence.
And since you're familiar with the area and you understand the demographics of the area, what proposed rent do you feel like you can get per property? And if you were to do some improvements, how much could you increase the rent?
So the rents now, according to the fair market rent, it was $954. With improvements, we probably can get them to like 1,000 to maybe 11. With
How many
improvements.
bedrooms is that?
It's the
For
bedroom.
954, if you said what you're answering to Kiana, like, is that a 3-2? That's a 2-1, 1-1? What is that?
With somebody as far as the mobile home parks.
Yeah.
They're a mixed use. They're mixed use. They didn't name how many exactly. What was
Right,
in the
so
park.
you're giving us rent market, but we need to know for how
Oh,
many bedrooms.
that was 2-bedroom.
2-bedroom.
Yeah, that was
Are
2
you
bedroom.
guessing or are you sure?
No. That was the fair market rent. It came up as $954. I looked it up on. Let me see. I may guess.
2 bedrooms, 2 baths?
Yeah, I might still have it pulled up. Okay, hold on. Let me just go back. Chill, Holly. Okay. I'm sorry, I'm trying to find it. I'm sorry, my computer is not acting right. But yeah, so it was for two bedroom. It's just being stuck right now.
You have more questions, Cam?
Yeah, no, that was the reason I asked. I mean, typically, most properties stay about 90% occupied.
Right.
So then you got to account for that when you're looking
The
to
vacancy
get
laws.
investors, so we can understand how the returns are going to look. And then, of course, the goal is to increase the rent every single year, 5 to 10% for your
Yes, ma'am.
investors to make sure they're able to get their returns. So that's why I was asking, do you have the answer to those questions? But based on my evaluation, I would have to say I'm out.
Okay,
But don't sleep. You do have an offer from Marcus.
I do.
Okay.
Priscilla.
You and Priscilla go to.
Yeah, no, we just did it.
So now, can I ask my question while you under that? Let me ask my question. So here's my what I would like to know. So I'm listening to 336,000 annually, right?
Yes.
Annually, with $954 average rent.
Average rent. yeah.
Right?
2
And
bedroom.
2-bedroom. We can, with improvements,
With the right improvements.
we can go up to 1,000 to 1,200,
Yeah.
right? And if we putting down, so I'm serious.
I'm
And
listening.
he coming off top of the head
I'm listening.
over there, right? I'm serious over here.
That's right. I like serious
So
people.
we looking at anywhere between 800,000 to 1 million that I'm financing,
Okay.
right? My question to you is, with that 60-40 split, just saying if we did that, I for sure would want to go down on that. I trust your work ethic because I know what it's like to burn the midnight oil to get something done, right? My ask is, in what time frame are we expecting me to get my investment back?
Well, so like I said, I was going to do a 30-day thorough due diligence first, get it under contract and things like that. So it wouldn't be, because the property is already, there are already people there. So the income is already coming in. So once we take over, then, it wouldn't be like.
No, that's not the right answer for investor.
Yeah, we just
Okay,
did the
so
So you need a number.
yes,
What I need to say? How many?
let the inner circle help her.
Let me see. And it-
Nia, come to the front. Nia, come to the front. Y'all give Nia some love. Come on, Nia. Come to the front. Nia is a human calculator from the inner circle who learned all of this through the inner circle.
Because he just wants to know how long is it going to take for him to get his money back. So you looked at your 5 year projection, right? So you can look to see what his return is.
She's giving him the formula right now. Nia, can you say it on the mic so everybody can hear that don't know?
Yeah, so she did a 5 year projection for this property. So she's going to want to know like what his cash on cash, which would be the money that he's going to put back in his pocket. What is that going to look like every year, as well as like, well, for him, yeah, it's the cash on cash, but for the property is the ROI. But yeah, did I?
Mm-hmm.
Okay.
So how is she getting that number right now?
So right now she's pulling up her financial analysis, which outlines this information.
and we're dealing with the internet, so.
Yeah, it's a little slow internet, but. It's not your thing up there.
Trying to come out.
Okay.
We're analyzing real deals, y'all. Are y'all okay out there? Yeah. Good. Are y'all enjoying it? Good. I love it. She is on it, baby. Y'all give our DJ some love.
Okay. 8.7.
Yeah, that's the
And-
one you have right there.
Right.
Right?
So 8.7 in the first year. So I have, in the first year, there will be an 8.7 cash on cash, and then we're looking between years 2 and 5 for an increase.
That was good for you?
That was good.
Nia, great job, Nia.
Thank you, Nia.
Get in a circle that lifts you up and supports you.
Yes.
Okay, guys, we've heard we've heard the deal. We have enough information, unless you guys have more questions, to decide if we're out or if we're going to take the deal or make an offer.
I'm out, and I say this because I need a lot more information about the tenant demographic, what the turnover is, how long does it take to replace a tenant if you've got a tenant in, because that's going to affect the numbers as well. So a little bit more due diligence there, but yes, thank you.
Thank you.
I would definitely want to know more information. Even like, have you done a research? What's going on around the property? What the neighbors are? Are there other trailer parks next to it or around it? Who owns those? Is there room for expansion? Like, have you done any of that due diligence?
Yeah, so I did do some due diligence online, looking for more things and things. So they are doing a tiny home community out there. There's a lot of developments going on. Also, there is, I wrote it down. There's a major road construction improvements underway in Chilhowie, and it's expected to improve traffic flow. And they're also they're opening up a once vibrant street, and it's being restored and improved, and it's bringing in, it's a $1.4 million redevelopment project that the council, and then I was saying about the council meet, so it's a $1.4 million project, redevelopment project that's going on. They've already started in September, I believe.
Okay, but like right around the actual property, what's going on the neighboring sides?
And Chilhowie, over where the mobile home park is.
This particular property.
So that was more included into my thorough due diligence to find out more about the demographics, like she wanted to know and things like that. So
You don't have that information yet. is what you're
not
saying.
on
Okay.
my paper right now. I just looked up on Chilhowie and what's the development and things like this going on around the area and Chilhowie itself.
Okay. All right. Yeah. I'm out as of right now.
Thank you.
Willing to go, but I'm also willing to pull back. No, and the reason why I will pull back is because the lack of due diligence on looking into it, having the answers on what's there. So it's a no for me because I feel like it's a lot of things that you still got to go in and do a lot of more research that should have probably been done before we came here and actually started looking into it so we can get answers. So just looking at the questions and how long it would take for me even on the 80%. If everything operated perfectly, it still would take me 4 years to kind of break even. And then that's not even including like a lack of rent or, the not being full capacity when it comes to the rent, to the tenants and the turnover rate with the tenants. So it's a no for me.
Thank you.
I'm out. No, the reason would be the only value I would be able to add is capital, and I have no knowledge, so I would be shooting in the dark and having to lean on you. So we would have to bring another person in to support the educational side that backs the capital. So
One more question. Is there any more?
You out. Yeah, y'all out. I don't want him. We out. Keep going. No, keep going, Demetrius. Keep going. I'm going to be nice today.
Is there any more space on the land to add more units?
Yes.
Because that means a lot.
So you back in. You playing hopscotch.
Potentially. There is? Do you know how much space?
I do not know how much space.
Are you guessing? Are you guessing
Well,
that there's more space? Or you just looked and saw green grass and was like, yo, there's more space?
That could change all these numbers if there is.
If there's more space for improvements. So if you're willing to give me time to do the more thorough
I have
due
an offer.
diligence.
You don't have to plead.
Okay.
I have an offer.
That's coach. That's your coach talk.
My offer have contingencies.
Okay.
Okay? It's contingent on you getting through the due diligence period. That's number one.
Right.
I'll tell you why I like this deal. This was built in what was the age?
1980.
Before I was born. It ain't going nowhere.
That's what
That's
I'm
the
saying.
first thing. The second thing, so that's stability for me. So I don't care if every trailer up and leave. The worst case scenario will be me putting back more trailers. I'm okay with that scenario when I think about it from that perspective. The next thing I like about this deal is that it's bringing in $30,000 a month gross. That's juicy, okay? And the fact that it's been there since 1980-something tells me that I can continue to count on that. And, of course, lot rents go up just like market value goes up. Right. So I'm definitely interested. This is an offer from me and One Chain. and I'll take in Leon as a partner if he would have me. Yeah. Yeah. Neil, everybody said they were out, so I can't ask them.
Okay.
Maybe. Marcus, maybe. Marcus, Kiana. So this is my offer. This is our offer. Okay. I would like this at $600,000. I will pay cash. Okay. I will give you a 10% acquisition fee, not perpetuity, and I will give you 5% for you to be boots on the ground and deal with the property management company.
That's good. I like that.
She has to go negotiate it. That's right. But this is where I want it at. I'm making $30,000 a month on $600,000. I'm going to throw my money there every day.
I'm going to talk to
You got 2 seconds to tell me what you want to do with this deal. 2. Time's up. Okay. The beautiful thing about $600,000 is I can give $600,000 cash, or I can take this to the bank and leverage my $600,000 and only put $120,000 down. My note on this is going to be somewhere around $5,000 to $7,000. It's making $30,000 a month right now. So if it's making $30,000 and I just deduct a simple 7 from it, I'm still up $23,000. Let's just say I deduct 50% of operating expenses from that. I'm still up another $12,000 to $13,000 a month passively that I'm putting into my bank account. That makes sense?
That makes a lot of sense.
You taking too long, though.
No, I'm with you, Coach. So I just want to just negotiate one part and take
you countering?
5% and 7%.
For what? What you do?
I'm doing what you're doing.
What you doing?
I'm doing what you're doing, Coach. Yeah.
Okay. Dereik is good at 7, but I'm not. Are you good at 7?
Come on, Coach. Be good at 7.
All right. 6% max. And I'll take it or I'm out.
6% is
6%.
I take it.
All right, deal.
Deal.
Don't matter. We still. It's interesting. Yes.
Praise the Lord.
You can use my phone. Great job. Great presentation.
But to be clear, that's if the seller is willing to take $600,000, which is
That's right. You
50%
have to
of the
negotiate it. But in everything in negotiation, you always bring it back, because the only thing we can control as an investor is what we're going to put our money into. Market value is only what the buyer is willing to pay. So if it's been on the market for X amount of time, they may be a lot more negotiable to take $600K cash. You see what I'm saying?
And break that down when you said, because you said when you broke down about that 120, how you gonna go to the bank and do it? Break that. Okay, good. And leverage a property. So if I wanted to leverage another property on another deal that comes about, I could do that as well. So be mindful. Got you. Let's go, because we got more deals to come. I got a few deeds sitting around. We got something together. So you said with like a $500,000 property, how much buying power do that give somebody?
Probably close to $2 million. Almost close to $2 million. So. No, 500,000. If he had 500,000 liquid,
respectfully, I got a couple of them. It ain't just one with us.
Mm-hmm. Yeah. Oh, you talking about both of y'all?
Yeah, I see his brain.
Yeah. He trying to keep the farm.
Oh no, we keeping that street clear.
Y'all got animals on there yet?
That's what we working on.
Okay. I'm talking black farmers in Atlanta. All right, Steph.
Do you want to do some questions from the crowd, or you want to?
Sure.
Okay.
I just had a quick question. The 954 included the lot rent or did not include the lot rent?
So if they are park-owned homes, there is no lot rent. It's just rent. So you're either getting tenant or park-owned home rent of $954, or a lot rent of 250, 300, whatever that is.
And they were all park owned already.
Yeah.
Okay.
Yeah.
Anyone else? The question was, what was 500 square feet? What was mentioned? Small.
So my question is, Terica, if you're willing to pay like $600,000, right, and let's say the seller wanted to negotiate, do you ever do like a seller carryback in addition to cash, or is like 600 your hard not go over that at all?
Yeah, now if I wanted to pay more, I wouldn't wait to pay it later and or over time. My price is my price. I don't negotiate it back and forth like that. That's a great point.
Great job. All right. Yeah.
Hey, Coach, I just want to know how long before we can reel out those numbers the way you just did. Like, when you start reeling out those numbers, everybody over here head said, what? Everybody looked like that might be a pretty good deal. Like, you were reeling out those numbers like it was...
It's repetition. Yeah. So
Jesus Christ.
we all up here can leverage we all in great financial positions. Knowing our buying power is always eye-opening for every last one of us. I will tell you, there's people that picks up things in the inner circle within 30 days. There's people like me that take a year, a little bit longer sometimes. I like things broken down at different levels. Dereik can pick up something way faster than what I can. Let me say this, he can pick up numbers way faster than me. I can pick up opportunities way faster than me. Yes, it's all across the state, right? Because there's a lot of developments that he do, what Priscilla do in Canada. Quaina work with multi-million-dollar investors all the time doing developments. So we all have like all of that. So the difference is I sit behind a desk all day long looking at this stuff, doing this. That's it, yeah. Yeah.
I'm the same way with the stock market. I'm the same way. I'll look at something out the gate and be like, nope, here's the value on it based on operating income, based on net margins, profit margins, and the average person will be like, yo, where the hell you got that from? Right? Based on dividend buybacks, cash buybacks, I can look at a company and see what it's worth or not. There isn't a specific date. Like I can say 30 days, I got it. No, but after I keep looking at the numbers, I get burnt a couple times. You get it, but it got to be the thing that you do. Yeah, it's the thing that they do. So they probably can walk up, anybody up here probably can walk up to a piece of property and look at it and be like, nope, I'm gone. And you'll be like, why? And they'll go to point that stuff and you're like, yo, I didn't even see that. So it's just a repetition, but I can tell y'all in the right place. I was proud when I saw the queen just jump up with the numbers. Like I was like, oh, that's good right there. That let me know somebody that's dedicated to their craft. Right? When your craft becomes second nature, that's when you know you need to be doing it. For sure.
And also, this is stuff that y'all shouldn't have to wait to coach say, look through this, look through that. There's a lot of y'all in the room. Get in small groups and just vet deals. That'll also help you.
We do that already in the circle?
Oh, okay.
You got to get in a room that's, you know what I'm saying?
Sure.
That's it. Repetition. Yeah.
Deshonda. Where's Deshonda? Come on, girl.
Hey, he don't like that he missed the deal, but damn sure don't like missing it to me.
Oh, okay, that's what I was going to do in this one.
Fucked it up.
Yeah. Think for a second. Or I'm going to read.
I'm mad both of them on one side. This ain't even fair. It ain't cool. I deal with one of them at a time. I can't deal with it. Like, they treat me like Drake right now.
All right. I'm going to read the executive summary while hopefully my computer starts to talk to the projector. So this property is in Hanahan, South Carolina. Okay. So it was built in 1960. It's located on Jones Street, which is centrally located duplex near prime destinations, including the Charleston International Airport, the Naval Air Force Base, and local schools, parks, and museums. The property is a gem projecting at 5.4 ROI in year one and 8.6 average cap rate. The property is tenant occupied. D. Green and Company is seeking to acquire this property between $290,000 and $299,000 as a buy and hold. The rent is projected to increase by 2 to 3% per year. We will input the strategy of short-term or mid-term rental options for optimal cash flow and better ROI. D. Green and Company is requesting 100% investor funding in exchange for 50% equity ownership. D. Green and Company will provide asset management in exchange for retaining 50% equity in the property for the life of the deal.
Okay. Hello, good evening, good evening. Thank you guys for your time today. Again, my name is Deshonda Green. I am the founder of D. Green & Co. And so the property summary, it is on MLS currently. It's a Class C duplex and built in 1960. It is currently fully 100% tenant occupied. Their leases are up in October. And currently it is renting below market rate. But I know that I could definitely do better as far as getting better cash flow on it, because where it's posted, it says that it was below market rate because of the housing situation right now, which I didn't quite understand, because there's the comps are performing well, and so I'm not really sure why it's below market rate, but I wouldn't go in pricing it at below market rate as far as Unit A and Unit B. It's 2 bed, 1 bath on Unit 1 side and 1 and 1 on the other. The asking price is $315,000. Due to the comps, you can get it between $2 and $99K. So my offer is I'm requesting 100% cash buyer for it. The value, there's recent updates of flooring, appliances, ceiling fans, electrical, and plumbing is all maintained. It is pretty much rent ready. It's rent ready because it is tenant occupied right now. It has a huge backyard with additional storage in the shed. And it's an excellent prime location where it is access to 3 major highways, I-26, I-526, and Route 78. It's by Mount Pleasant, Somerville, downtown Charleston. You have super easy access to it. It's near the airport and the joint military base, and so all major employers like Boeing, General Dynamics, St. Roper, Francis Hospital is very close by, and Park Circle. So I'm saying all these things because I am more of a local native to the area. My family, I'm from Connecticut, but I spent my summers in Charleston, and so I've seen how much the area has grown, which I like and I don't like, because they're taking the country out of the country by building up all these different duplexes and apartment buildings and stuff like that. And so I'm just like, I want to get in on this. I might as well join them if I'm not, beating them. And so there's a lot of value, because Charleston is one of the most desired locations to live in and to travel to. So my exit strategies would be, yes, to buy and hold to recover the finances placed into the property, and wait until the house equity increases and then possibly sell it. But I want ownership. Ownership is my birthright. My ancestors were born and raised from Charleston, South Carolina, and so I feel that it is necessary that I invest in it and keep it as a buy and hold. And so there is also opportunity for short-term or mid-term rentals due to all of those different businesses that is in the local area, plus colleges and universities. And so being able to maintain cash flow and keeping it tenant occupied would not be an issue. So going to the next financial analysis, These are my, thank you, Steph. This is just proof of my resources as far as what the market value is right now. Fair market rent, Rentometer, and Zillow, those are their numbers compared to what the tenants are being rented at right now. And so it does pass the 100%, 100 times 100 rule, sorry. And then moving on to my operating expenses, net income. So I did do my due diligence as far as making sure that the numbers are correct and make sense. These are the numbers that's based on the market value of the rent and expenses right now. Next slide. And that's this slide and then the other slide. My cash on cash return, I have a projected analysis of 8.4 for the first year and 5.4 ROI for the first year. Yes, Ms. Steph? You're okay. And this is my numbers as far as Match Advisor and Airbnb. They typically, right now, the occupancy rate is about 57%, and average daily rent rate is 160. And that's just from Match Advisor, but when I did B&B, is about $250 per night if I was doing it for the short term. So, for an example, if I wanted one side to be, fully tenant occupied, and then I could rent the other side for a short term or midterm option, just to be able to get your cash flow sooner than later. So I put that on there for that. And here is the cap rate projected from year 1 through year 5. So these are solid number performances. Year 1, you get a 5.4 return on your investment, 8.4 cash on cash. And by year 5, you'll get at least 50% of your ROI. And your cash on cash is 9.1, I'm sorry. And then the cap rate is 9.4 by year 5 also. Yes, thank you. Thank you. I didn't know if we was gonna have a clicker or not. Thank you. And so about me, a little bit about me, I did share how I'm invested in this area. My ultimate goal is to be a micro home developer and investor. And my background is education, and I was a director. And I believe that I will be a really good partner and contribute to this partnership because I am good at relationship building, problem solving, and I have the ability to manage assets effectively. And that brings value to the partnership, so that way you can be 100% passive. Investing in Charleston area is personal, as I spent my summers here with my grandparents, and I believe, again, that it's my birthright to own property. And I have, with passion comes determination, so I'm super determined to be a real estate investor, and you'll be confident that I will be able to deliver and manage with excellence. 50-50. So 100%, so it'll be 100% that I'm asking for a cash buyer, and you would get 50% equity and I would get 50% equity. And then this is just a virtual walkthrough of the property. I don't know if you would like to get eyes on it, but I put the link through just so that way you'll be able to get a tour to see the proof of the upgrades of the updates that they have had. Day-to-day, hi Neil. I'm sorry? What I do day-to-day, I am a flight attendant and real estate investor. Yes.
Who you fly
Marcus need a buddy pass.
Breeze. It's a fairly new company, but yeah, Breeze.
Relax on the buddy passes. You're talking to me. Remember. We threw the Jets. Question.
Yep.
Wait, can I go back? I wanted to see the outside.
Yes. The outside.
It threw
of
me
it.
off because now we actually get to see the property, which is dope. I like that.
That's the outside right there.
Yo, leave me alone, man. We here for y'all today, all right? All right.
You don't got nothing to say.
No, I don't. I just wanted to see.
Oh,
I wanted
you
to go
just
back
wanted
to
to see the
house and
outside?
who she flew for.
Yeah.
I want to know who she flew for.
Okay, so I'll start and then y'all can give your feedback. So they already fixed it up, correct?
Yes.
So it's no ARV.
Okay. Is that a question, or are you
Yeah.
just saying blanket statement?
Yeah. I'm asking because of the simple fact you just, expressed to us that they have renovated the property and for us to take a look at it. It was the only thing I was holding on to personally to stay in the deal, to hope that there was some type of equity. But so this is market value. So let me tell you, I guess for me, I probably should have went last, but it's okay. I don't want to give you 50% of 2 doors. That's a nothing burger to me.
Right.
So you want me to put up $300,000. You take 50% of the rents that's coming in. That's $3,000. So you gon' after expenses. Let's just round it to 2. So you get 1,000 and I get 1,000. 5% ROI. 20-year payback. That's what Derek's in behind me. 20 years.
Right.
20.
Well, I knew going into honestly presenting this deal and then seeing, coming here and seeing what the other inner circle people are presenting, they're presenting
It don't matter what they look
portfolios.
like. I care about your numbers.
Right, and so I was thinking because
Don't think bigger is better.
Right.
You need to defend your deal.
Okay.
I don't want you looking at what everybody else in the world got going on. Everybody and their mama got deals going on. All that matters is the deal you're putting before your investor and saying, because guess what? We already know that there's 100 other deals out there. We want to know why your deal is special. Because if this deal had equity, if it had, higher rents, I would definitely be all over this, whether it's 2 or 1 or 100.
Yeah. I thought it was at least, because I would go in asking for, although it says market value, there are some comps that go even up to 320, 330. So even if we're getting it at 290, 295, 300 or whatever, you would still get, there's room for a little bit of equity.
But it's not
So
enough to
just-
refi by the time I put money in. So you want, I'm going to have to still get debt. I would have to get debt in order for it to make sense, and it still wouldn't make sense with debt.
Yeah, no, I knew for sure with that it wouldn't make sense.
But I'm talking about for a partnership. So it's
Okay.
it's not enough meat on the bone.
Right.
To me, this is a great deal for you to do by yourself.
Right.
And to make, a few $100s a month passively.
Right.
And be able to do it, or even house hack, because again, if not saying you want to do this, right? But for those who don't know, you can live in one of the units and rent out the other and get an FHA loan and put 3.5% down.
Right.
That may be more entertaining for someone than, me putting up that money, getting it back in 20 years. There's a lot I can do with $300,000 in 20 years.
In 20 years, for sure.
Yeah, so
Yeah.
I'm out.
Thank you.
Thank you.
Thank you.
Y'all give Deshaunda some love first. Yeah. But no, we're not done. We're not done. So I'll say that generally speaking, the question's asked all the time, is this a good deal? And there's never a clear yes or no answer because everyone's investment objectives are going to be different. For me right now, I am not so interested in buying a 10% ROI or 10% cap property when it's only 2 doors. Why?
Right.
I'm okay with 10% if it's on 50 or 100 doors. Why? Because you're playing the volume game. And there's actually a lot less risk when you play the volume game at that rate. That's what justifies a lower cap rate. Something like this, and I want to touch on this right here. Thanks, Steph, for pushing it there. But for something like this, it's a lot of risk, right? If there was equity, like T mentioned, let's just say, for example, work was needed and we would end up with $150,000 to $200,000 of equity,
Yeah.
which would put us in maybe at like 60%, 50% on the property. Well, now all of a sudden, we have the ability to leverage out that equity to invest again, and it makes it more appealing, right? Like
Right.
it makes all of our numbers come up. So I want to point out, and I think this, what T mentioned about this being probably something you should do on your own, I 100% agree with, and here's kind of where I want to get at. How far have you looked into the Airbnb side of this?
Not decent enough. Decent
Okay.
enough. I didn't honestly put it on there, so that's why I lightly touched on it. But on that side of it, it's way more lucrative. But I just wanted to pose different strategies.
I would have presented the lucrative side, which is the Airbnb. Because even at $160 a day, which is you're saying is the low end, if we say, hey, we're gonna rent each of these units for 15 days out of the month each, that's right under $5,000 if my numbers are right. So you've literally almost doubled your revenue just by doing Airbnb. And there will be months where you're over 15. I mean, if you can even push, there's a lot higher ceiling if you're running it as an Airbnb.
Yeah.
So I would propose maybe taking a look at that.
Okay.
And kind of rerunning the numbers as an Airbnb.
So when I rerun the numbers, I see you, Priscilla, and I'm anxious to hear your thoughts. When I do rerun the numbers, would that be something that you guys would reconsider?
I like 20% ROI. So yeah, if it's at that, and it seems like these numbers would lend itself to be at that. But again, it's very contextual.
Yeah.
Because for me, I'm not super interested in lower unit counts right now because we're going for scale versus.
Exactly.
Yeah.
Thank you. Okay.
I think I've got some opportunity for improvement in terms of how you're presenting.
Okay.
And so I presented to a lot of investors. I've had JV partnerships, when I was starting out in development, going to people who had money in it. I think a lot of it's the KYC, is know your client type of thing.
Yes.
So understanding that us here on stage, we're going to want to see know your client. So us here on stage, you know that we're going to be looking for, like Dereik just said, 20% ROI. That's where we get excited. And so leading with your best foot forward.
Yeah.
So I would have led with the Airbnb play.
Okay.
And then, giving some justification around that, because the higher the number, we're going to get excited a little bit faster.
Yeah.
Additionally, Kiana and I were just looking at some of these numbers here, just in terms of not having any value add to the property. So again, another reason to lead with the Airbnb side, because you don't have to do any rental work, but you're going to get immediate, good, decent cash flow there. And then we're looking at some of these numbers in terms of the sales history of the property on Zillow. And in 2020 it was sold for $110. Then in 2022 for $227. That person probably overpaid. And then so.
And so when they overpaid in 2022, you're pitching market to investors. Like on the I can tell this is on the MLS. And when you're looking at, even when it comes to the rents, they decreased their rent ask in May of 2023 from $1,225 to $1,150. That means to tell me these numbers are far-fetched from what the reality is of the duplex. And so that's why you should have just led with the Airbnb.
Okay.
For sure. And if anything, when we're looking at the value add that they did, there was nothing major. They didn't say anything about the roof. There was nothing about the HVAC. The real value improvement. So for me, this wouldn't be a good deal. There's not enough.
Yeah.
There's just not enough cash flow. We're out.
Thank you. Yes. Thank you. Yes. And go with my first mind as far as pursuing the short term. And I just also, and then I did consider the whole house hack, but I'm not about to sit in front of investors and be like, hey, can you fund my house hacking? So that's why I didn't go present that route.
I don't think that's a terrible idea for the reason that, the deal just looks a little different. For example, if you're getting an FHA loan, and you need a JV partner for the down payment. There's other things that have to happen there from a lending perspective that you have to be very cautious with. But, again, debt is debt.
Yeah. Right.
Okay, well, don't listen to me.
Yeah. You got to live it. Yeah. You have to live it. Yeah. Right, and I'm not going to ask, like, investors, like, hey, can you help me with my, fund my...
That's what I...
Like what he's saying, you can ask on a conventional side, or you can say, hey, can you give me private money for $300,000? I'm going to be the primary tenant. You can check my credit. These are my reserves. I have this amount to put down. And then it may be a little bit more appealing because now we're looking at you as an individual, and now we're just a lending institution that's giving you the money.
Yeah. Okay. Thank you.
So, somebody say Dereik loves his partnerships.
Dereik loves his partnerships.
Yeah. I'm out. I think everybody covered everything. It'd be repetitive for me to repeat stuff that everybody said already. So.
Yeah.
I appreciate you for coming up, putting that together. I think I'm in a space with Terica. I've been just doing a lot with her, so I'm just looking for volume.
Yeah.
At this point, so I did like what the Queen said, like just being more diligent in your approach, looking at the numbers. Even me, because I'm looking at the numbers like, oh, that's cool. But then when they say, I was like, that's a little more research for you. So
Yeah.
I think you did a great job. I just think right now I'm looking for volume. I'm trying to skip the 4 blue houses, green houses, and go to the red hotels. You heard me?
Yeah.
Big trap, yeah. But great job, Queen.
But let me tell you this, right? Come back to PC Live. How many of y'all going to be at PC Live?
Me.
How many of y'all want to be at PC Live? All right, babe, I got y'all. That's right. Okay, y'all better come. So we will be having Investor Tank at PC Live. Okay, so just because this one didn't make it through, come back if this is what you really want to do.
Yes. Thank you so much. Thank you.
We got 2 more deals, y'all. We're getting through them.
I like
Yes.
this.
Jay, make your way to the front.
All right, Jay. Don't be shy.
All right, so Jay's property is in Memphis, Tennessee. Yep. All right, so this is a 3-bedroom, 2-bath, single-family detached residence built in 1928 in Memphis, Tennessee. It's located just 10 minutes from downtown, which hosts the FedEx Forum, Beale Street, and Riverfront, while only 15 minutes away from the Memphis International Airport. Surrounding areas are currently being rehabbed and flipped, putting 1302, that was the address, in a path of progress. With an ARV of $153,000 and estimated rehab costs of $39,000, an additional $7,800 in holding costs. The company is seeking to acquire this property between $29,500 and $34,500 as a fix and flip. The company is seeking 100% investor funding for a 50-50 split of profits. The company will provide the time resources required to source contractors and bids while seeing the project through to its completion on schedule. Jay, tell us some more.
Hello. So,
Yes, sir.
Yeah, because y'all hogging over there. Yeah, we're a team. We operate as a team over here. Don't ever get it twisted. It's fine.
so I ain't all that prepared like everybody else, cause like I really just threw this deal together.
Oh wait, whoa.
I'm out.
Are you for real?
I'm out. Wait, first off, speak with confidence. Take your hood off. You come to talk to people about some money. Take that hood off. Stand up and stand in it. You is ready. Your deal is whatever. In the worst case, you're going to learn.
Yeah.
You ready. Let's go. We're going to figure it out.
You got this. Stop devaluing yourself. You got this.
I got you. So
I got a question before she go. How many people like the power of this? How many people in the mastermind, right? Raise your hands real quick. That's pretty. How y'all like the community? Y'all see it? How supportive that is right there? Yeah, I feel good about that.
Okay, so yeah, this property it's been vacant for a while. It has switched ownerships like twice in the past 6-7 years, but it has since been vacant. I rode through the neighborhood like it's a Class C neighborhood. One property that is similar to it, it's a 3-1. Has recently been renovated and sold, but like that was the lowest of my comps that I found. I think it was like 68,000, but in the surrounding areas, comps were coming in like hold on, I don't even know I got it on this one. Y'all give me a second now. Okay. So like I was getting comps coming in at 199, 195, 150, 135, and 175. And that was like within a mile radius of this property. So that gave me, I had comps at 199,000, 195,000, 150,000, 135,000, and 175,000. And those matched this property for a 3-2, meaning 3-bedroom, 2-bathroom. That gave me an ARV, throw in that 64,000 comp that was in the same neighborhood. That gave me an ARV of 153,000, excuse me. It's going to be a total gut rehab. I did that, the renovations at $35 a square foot. This property is 1,108 square feet. And they gave me a rehab cost of $39,000. The debt, insurance, I just threw in a number for utilities, $1,200, taxes, and contingency, like for 6 months, that added up to 46.8, so 46,800. Yeah, I'm nervous, y'all.
You're doing good.
You really are.
Yeah. It is juicy. It is juicy. So I know for a fact though, like I just want to put it on record. I know for a fact because I woke up this morning, I ran my numbers wrong. So the NOI that I have and the ROI, cash on cash, they're not.
You don't need that for this.
Yeah.
You don't use that for that. Yeah.
So yeah, they're not all the way right. My numbers is not all the way right, but I know for sure this is a juicy.
Talk to us about the area
yeah.
because this looked like a crack house.
Mm-hmm.
Right?
Yeah.
So help me believe that it's not just in a crack house community that you're asking for almost $100,000 for.
So yeah, it's not like I said. I drove around. I got a video if y'all want to.
Yes.
Yeah.
Yes. Pass it
How
to
do I
that
do it?
side
Okay,
first
okay.
because they said we're a team.
I mean,
we a team.
You know, what happened was you got the 2 real estate people here, 3 of us, and then you know, y'all kind of double teaming us. It's fine.
You don't have triple. You got.
Let's see the video.
You got 3 developers.
Run the video, because I think we got it off already.
You got 3 developers on the front row.
I understand. That's what I'm trying to say. That's why we a team.
Yeah, that's right.
Yeah.
And you get 2 Marcuses. Like, what the heck?
Well, Marcus is the money man. We got the right team over here.
Yeah.
Y'all have fun over there.
So yeah, they're pulling up the video.
The most sexiest thing to an investor is confidence.
Yeah.
I'm just going to prepare you because you're in the inner circle, okay? Because we're doing gentle investing right now.
Please talk to me, guys.
Yeah, in the real world, They're not going to do that. A banker, another investor, they're going to look at you, and one, they're going to either take advantage of you, offer you some type of predatory loan that you can't pay back and prey off of you, right? And or they're going to just take the deal from you if it's a really great deal.
Right.
So the thing I want you to walk away from, whether you get a deal or not, is your confidence.
Yeah.
Because you're not asking us for a favor. I need for you to get that thought out your mind. This is not a favor. You're saying, hey, I'm about to help you make some money. It's a different approach. If you come in, when have you ever went to somebody to give them money nervous?
No.
You don't.
Yep.
You don't hear. Okay? You got this, Jay. Oh, wait, turn the light off so we can see, because I'm sorry, I got 4 eyes. I got to.
So this is the surrounding area, like going into the
Oh, that's an apartment right there.
Yeah, this
Okay.
is going into the neighborhood where the property is. Like a stop sign away. Yeah. So yeah, there's a lot of boarded up houses over in this side. Oh, I don't got that video on this phone. So yeah. And so the surrounding areas around this neighborhood is currently being renovated right now. And yeah, I believe that was a church. Yeah, that right there is coming up as a church. Yeah,
That's a church. I like that, like a community center.
Where, right here?
The school.
Yeah, I can't tell.
And look, they filled the pothole in, huh?
Question.
Yeah.
Yeah.
Stop the video. Let's do this. Come on.
No, he trying to talk.
Approach it like this. Approach it like this. How y'all doing? So me and my partner Jay, we got an opportunity for y'all. Right? We got an opportunity we want to present to y'all. Very lucrative. The upside is strong. It's very creative. I need you to see the same thing that I see. Because if you see what I see, then you see the upside and the potential. It is going to need a little work, but with my determination and dedication, we can put the numbers together and we can create something real beautiful. Now, this community right now at the moment is distressed, but there's a lot of work being done to it. There's a school, there's a church, there's a lot of developments going on right now. There's an opportunity for 5 vacant homes, but I do feel with my knowledge and information, with my access to my resources, with your experience in capital, we can do something, right? So what we got here? What we got? All right, we got a 2-bedroom, we got a 3-bedroom, 2-bath. Let's go talk to them.
3-bed, 2-bathroom.
All right.
1,100 square feet.
Yeah.
1,108 square feet.
What else? I see the notes.
I know them notes is everywhere.
Let's go. Don't worry about it. All right.
What else? Hold on.
So there we go. All right.
So I'm providing boots on the ground. Like I said, I kind of like just threw this property together, but I know for sure.
All right, so the
Well,
value,
let me clean it up. Let me clean it
The
up.
value we bring to the deal right now is I'm boots on the ground. We are boots on the ground in the area. Not only that
Question.
you would not, excuse me while I finish presenting.
Because we just want to know real quick, is it a lipstick flip, or is it going to be
No,
major
it's
mechanicals?
going to be a total
It's
rehab.
going to be a total rehab.
So it's
Total
major
rehab.
mechanicals.
Yep. But I don't need you to worry about that. I don't need you to worry about that.
Why?
I don't need you to worry about that. Here's why. When we're looking at this deal, I have a team of resources
that you don't have to come to Memphis to deal with. All I need you to do is understand the progress that we're going to make together. I need you to, we have plumbers, we have painters, we have roofers, everything that's needed. I have them at a great price. And that is my advantage of being in this deal. That is my advantage that I'm presenting to you for this deal. The upside on this deal is amazing, but it will take some time. But I want us to look at it from a buy and hold perspective, because as we develop these properties, this community is developing as well. It is an amazing opportunity for us and for you all. And I would love for you to see the video that we've presented. It is with my phone because I saw it and I was just so eager to get it to you all. So I want you to see this. I want you to see this deal that we're presenting. And as you see this, I want you to look. So right now, I'm going up the street. As you can see, there's a church that gathers everywhere here. We can see that now. This is a local setting. It is kind of small. Don't worry about the car. That's why we are cleaning this neighborhood up. I'm working on doing that. This is an auto mechanic, so that's not just a bunch of random cars right there. And the neighborhood is developing. Again, it is a community that is growing, and that's what we want to set the tone for what's going on in this community.
So this is now entering the neighborhood where the property is. I'm going down the street. The property was on that left turn right there, but I'm going around the block right now. That's another church, it looks like, right there. There's more houses down that street that are vacant, boarded up. There's no young kids out, nothing like that. What I saw was like older people in this neighborhood. So like maybe in their 40s, 50s, hanging out. Oh, I'm sorry, y'all. we got seasoned. Y'all know what I mean. Y'all know what I mean. Y'all know what I mean. Look, now I just gotta watch my vocabulary. Y'all work with me.
All right, let's turn the lights on and assess this deal. I mean, she just said I'm old. Jay, the first thing I would say is, just as an experienced fix and flip investor, there's no way you fixing this house up for $34,000. There's no way. The second thing I would tell you guys is this: I am not afraid of areas like this. This is how you play Monopoly in real life. You can go and buy all of these properties at dirt cheap. I'm talking dirt price, and tear them down if you want, and or fix them up. You know, I love buying in rural communities where the properties are dirt cheap. So like in Atlanta, y'all can't find this $30,000 house. I think y'all dirt probably is what? I mean, the dirt I bought was like $350,000, but $382,000 here. Like, Jesus. Okay? So I would tell you that, you know, what I loved is that, you know, Trapper got up and he was able to help present the same deal and give a different feeling. So you got to work on your pitch if you want to get serious money from investors. Like, if this is serious for you, you can't just say, I threw this together. Because what I feel like is this: as much as I want to invest in this deal, I cannot trust the person who I'm investing with. Because if you say, I just threw this together, that means you're going to throw the house together and I'm going to be liable for it. So for me, I'm not interested in somebody who's just going to throw something together, put any numbers on the paper. That's fraud. Just being honest, right? So I'm preparing you for the real world out there. If you present investors with fraudulent numbers, you can go to jail when that deal do not work out. Right. People will come after you and say you're a scam on the internet. So you want to get as best numbers as you possibly can and have some type of reference point of where you got the numbers from. You can't just pull them from the air. So, you know, as much as I was excited about this property before you presented it, I was super excited, and this was a yes. It is a no now. because I need for you to work on those things for me. I can't trust the numbers. I can't trust anything on this deal because you told me I threw it together. And I'll pull my numbers from anywhere.
I got you.
All right.
I'm out.
Yeah, I wouldn't add a whole much more than that, other than I do think that this is a PC Live rehash type of situation, and I think you need to add the rest of those houses to this presentation.
Yeah. I got you.
I also said, as Terica being your mentor, your presentation means a lot. Because I know she's pouring into you, right? So you don't just represent yourself when you come up here. You know, you represent her too. And I seen her. I heard her on the phone. I heard her on the phone. I was like, oh, she talking to the bank people like that. That's crazy. Right, so you represent her as well. So just take more. Don't nervousness. But take more pride in what you're doing. Right, like this gonna change your life. If I know something got the potential to change my life, I'm all in on it. Right, so go all in on this. Don't, man. I just threw this deal together. That tell your mentor you ain't serious. You feel me? That tell your mentor you ain't serious. And I know you serious about it because you wouldn't be here. Everybody in here serious about it. You know what I'm saying? Y'all know it. Y'all talk to somebody got a whole bunch. I'm trying to get like her in the real estate game. Right? That's your example right there. You don't got to even look far. So just take it a little more serious and just think bigger. You got this. That's what I got to say.
I appreciate you.
I'm here, Team QW. So just to go back to about the buying the block thing. So even from a rehab or renovation perspective, you're going to get a way better deal. You're going to renovate for less per square foot the more you have. You need scale. So if you were to go, and my approach would be honestly just door knock. I mean, if they're older folks, but real old people like 70, not 40s. But they might be like, you know what, I'll take some cash out and I'll do something else, whatever their situation is. But I mean, I've door knocked in terms of putting parcels together. And then when you do the renovation, you're going to get a better deal on the kitchens, on the floors, if you're buying, 10,000 square feet worth versus, just one house. So it makes it a lot better. The volume adds far more profitability. Like you'll 2 or 3x that per house just from that perspective alone.
And just to add, I would invest in having your own team walk out, because I see that, this is what the investor put. They said it's going to cost $35,000, but from our experience, it's going to cost you a little bit more than that to do a complete rehab of this, right? So when you go out with your own team, make sure you have your own quote, so that way you can do your own ARV. I'm going to tell you anything to sell this property, because keep in mind, this investor bought it for like $6,000, $8,500 in 2006. Their upside is 429%.
So yeah, it had on the tax assessor website, it had got sold 2 times after 2004.
Mm-hmm.
So yeah.
So yes, I would definitely just do your own due diligence, so that way you're presenting kind of close to real numbers. You never know till you get involved in the rehab, but close.
So the rehab numbers that I get, I did like $35 per square foot. That's how I got my number.
Mm-hmm. Where did you get those numbers? Yeah, where?
Just through one of our classes, like we were saying. Say it again. What price per square foot did you use for the class? $35. Per square foot, $35 per square foot. Mm-hmm. For like a full gut. That's not right. What was the price for a total gut per square foot? It's like 65. Exactly. Okay.
Take it more serious.
Erica, can we get a mic?
So for low-end renovations, right, you can start anywhere from $10 to $15 a square foot. That's purely cosmetic, maybe change out a little tiny amount of flooring, something like that. Yeah, that's renovations, not a full gut. But for full guts, you're going to be somewhere along the lines of $55 to $65 a square foot. So do the math now. What is the square foot on the house?
1108.
Do 1108 times $65 a square foot. What is that number? And how much we said it was going to be worth?
153.
No. I just said that you're probably looking at about $70,000 in renovation. But that's because I went to the high end of the calculation per square foot. Yes. Nah, that's not conservative. So that's like, you know what I'm saying? Like, if you can't do a renovation for a house that as this size square footage for that price, I'm building them for a little bit more than that. So for sure, you can renovate this house for that price. Now it gets with you negotiating with the contractors and everybody else.
So I got a question.
Mm-hmm.
The lot next to this house is vacant, is like completely empty. This house is zoned for both single family and two family. Is there like a way that you can?
That's the same, but that's the same thing. So single family, duplexes, tri and quad is all residential.
Mm-hmm.
So it's still all the same. So you can build it if that's what you're asking.
Yeah.
You can build all the way up to 4 units is what I'm telling you. Yeah.
Can you say it again? What is the neighbor selling?
What is the neighbor selling for?
For the vacant? I don't know. It wasn't I didn't see nothing.
Terica,
Yes.
you said PC Live is going to have 2,000 people.
Almost 2,000, yeah.
Okay. This is the mastermind, which is a level above. They get more intimate training with you.
Correct.
Okay, so PC Live is going to be a lot more open to the public.
Yes.
So they get more access training, and they'll probably be the first people, or they'll get the opportunity to speak first.
I don't speak to outsiders.
No. Oh, okay. So the people that present the deal, what I mean, though, to present the deal will be.
It's
will
only
be,
inner circle that presents.
Okay, listen, I'm going to go off topic because I haven't been impressed with
I'm
nobody's
gentle, y'all.
presentation. Okay? You go in events, this is how you get rich. Y'all want to know how to get money when you go into somewhere? You get attention. Anytime you get the opportunity to get attention, you capitalize off of it. That's the 100% why everybody up here is successful, because they figured out a way to capitalize off the attention that they get and put their best foot forward. When you guys present your deals, listen, let me explain something. When you went and you came up there with that deal, I don't care if the deal was shitty. What you come up with is say, hey, I'm in Memphis. Guess what? With that same deal, there's 8 houses available, and guess what I did find is that I found the solid team that's going to protect the house. So when you're doing renovation, nobody steals it. So we have boots on ground who watches it in a block radius. Somebody lives there who can watch it, so it never gets broken into. I also have X and Y and Z resources. All my resources is there. I have a carpenter, I have the plumbing, I have the roofing company who are legitimate, trusted, on site. So you want to put your best foot forward when you're presenting the deal. It's not only about the deal. What I would do is the deal is one part. My point is, y'all, everybody listening to me. If I got 2,000 people listening to me, I don't give a damn about nobody on that desk. I don't care about nobody buying this deal. I don't care. Why? Because the other 2,000 people, when I turn around, is the people I could potentially go work and build with. So I'm going to make myself the hierarchy. Off top, I'm making myself the hierarchy in this deal, in this arena, right? So in the arena, I'm going to make myself the hierarchy to where when I walk away, everybody like, well, I was thinking about investing and I got a question. Guess what? Now that you have a question, I have an opportunity to make some money. So you got to come and you got to step with confidence, though. So when y'all come, don't play. You knew you was coming. You just have to have a plan of action. So create your plan of action when you get ready to go and you guys know it's going to be 2,000. There is no reason that y'all not all going up there and with the opportunity to get to it. This is literally how I met Neo because I got on the stage and all I did was ask value. I didn't answer nobody's questions. I was on a panel. I didn't answer the question. When they gave me the mic, I said what I had to say. That was it. I'm here now. That was my first speaking engagement. What's in it for me is what everybody has on their head. So you got to realize you got 2,000 people that's sitting there looking to get into real estate. If you can add value and you can get 20 people to come and do a deal with you, you win. All you got to do is put together. It ain't about, oh, I got the house. No. I got a second. Listen, I went to a real estate wholesale meeting and I seen everybody presenting deals. I left and went and created bandit signs and acted like I had houses for sale so I could find buyers. I knew nothing about real estate. You can go back on my page, 2012, 2013, I was posted bandit signs about having real estate deals available in these price ranges. Why? Because when people called me, I just went back to that meeting and sold their houses. You got to know it's going to be a room full of opportunity. You ain't got to be the person to actually have the deal or go and do the fix and flip and rehab. Sometimes the middlemen get rich. Learn how to be the middleman. In the gold rush, the person who got rich was the person selling shovels, not the people looking for gold. You know what I'm saying? So y'all gotta realistic cap. Y'all gotta realize, like, when you go into these environments, how you really win. You know what I mean? Like, this is, you gotta know. So when you go into these rooms, it's not always about your deal, but it's always, you walked up with your hood on, you already lost. Nobody else was like, yo, I'm willing to give you some money, or I'm gonna come and do a deal with you. Come in here and step. Your presentation, the way your appearance, everything matters. So when y'all get on that stage in front of 2,000 people, y'all better kill it. Y'all don't come in there half-stepping at all. All right?
Let's go, man. Stephanie. Kim want to say something. And then we're going to get to the last deal for time's sake, because I said I was going to let y'all by 7. I'm sorry we running a little behind. Are y'all okay? Mm-hmm. Y'all good? You sure? Okay.
This is quick. Coach T and Dereik have been drilling into us partnerships. I want to encourage you, work on your deal, take everything that they told you, but you don't have to get up on stage alone. You have a whole circle of people who can get up there and speak with you. You all can collaborate on what your deal is. And if you feel like, you know what, I just don't feel it, hand the mic to somebody else, get the deal.
Yeah. That's what I'm talking about. All right,
Anything else?
Nah, let's get to the next deal. Well, one more right there.
Revitalization.
So it's a lot of people, and I learned from working with some people in prison. The jail, those people, they don't go in the areas where schools and churches are because they get more time. So it's a lot to be done with all.
Well, interesting. All right, Renee.
Renee, you up. Thank you, Jay.
No. I was trying. Oh, I already knew it.
Okay, as Renee makes her way up, this property is in Atlanta.
ATL, shawty.
So, benefits of this portfolio are long-term profitability, appreciation, and cash flow. This is a multifamily parcel with residential properties packaged in one deal, all located in one of Atlanta's most desirable, trendy locations in Mark Park, Reynoldstown, neighborhood of East Atlanta, Georgia. Yeah. There's a multifamily property with 100 units, 6 single-family residents, and 2 lots, which sit on 5.88 acres at the nexus of MARTA train across from the street, while running through the site of the future Atlanta Beltline development. This is prime real estate. Think Ponce City Market in Atlanta. Located near Target, Home Depot, Kroger, Marshalls, Office Depot, multiple eateries, and hair salons. I will let you take it from here.
Well, good evening, everyone. I think I have less than 7 minutes. If you don't mind, I'll take 20. Thank you so much. So my name is Renee Diabru. My partner Raquel Wilson is not here. She lives in Nebraska, so I'm representing the both of us. We are a team. So we appreciate the time that you're giving us today. So our company, Something About Theater, LLC, that is my company, and Raquel's company is Goshen Light Enterprises. We have found several properties in which we went through about 7. We settled on this property because it made more sense. This is a portfolio that's being sold, and the portfolio includes, thank you. Thank you, Stephanie. So the portfolio includes 6 homes, along with a 100-door multi-family apartment building, 2 lands that have utility on the land already. So we'll just quickly go through the 6 single families first. This is the 86 Kensington property, and you can see here all the stats for it. 3-bedroom, 2-bath, the 1472 square feet. So the market rent value for this particular home is $2,680, and we are going to offer $175 on this property, although it was last sold for $353 due to the square footage, the lack of upgrades and so forth in the home. So I'll go to the next one. The next one is 1100 Hardy, 2 bids, 1 bath, $950, same thing. Last sold for $250. We're looking at offering $100,000 for this property at market rate of $22.20. And our market rates were found on HUD.gov. This is the 3rd property, same street. We have all of the properties are on 2 streets, so they're embedded in between $800,000 and $900,000 homes. We'll get to that in just a moment. This home is the same, 2 bids, 1 bath, $840, and last sold for $425. And we are going to offer $100,000 at a market rent of $22.20. The next home, same thing, 2 and 1, and the market rent is $22.20, and we're going to offer $125. And 100 Kensington, 3 and 2, $26.80 for the market rent, and we're going to offer $165. And this home here has a mortgage on it, so we had decided not to include this and to probably try to get it out of the portfolio because it's upside down. They're doing renovations on this property. And it just didn't make sense. But then sitting here, I thought maybe it does make sense, only because he never gave me a price for any of these properties. He gave me a full price of $25 million for all these properties plus the apartment building. And there was nothing specific with these. So I decided, why not? Put it back in. We can offer him whatever we want to offer him. And he can pay it off with his money, not ours. So I'm going to put that property back in, and we'll probably offer the same as we did with one of the other 3 and 1 bedrooms. Unfortunately, it's not on my bottom line, so I have to rework those figures. These are the nearby properties that are worth $850, $950. We have $1 million properties on the same street in which I drove down. They're 3 stories going up and back, and they use them as A door, B door. And these properties here that he's selling are as old as 1940s, 1930s, and so we can bring it back up to market value to match the neighborhood, because they do not look right. They look like they're like something's wrong in the neighborhood with these houses just sitting there. So we can bring some value to these homes, and there's 1 or 2 things you can do. Offer a really disrespectful offer for these homes, although they're saying that the house is worth. They've been on the market actually they're not on the market, they're off market. They're all off market. The whole portfolio is off market. So at this point, I do know the seller wants to sell quickly. So you can do 1 or 2 things. We can offer a very disrespectful offer.
You talked to him?
I'm sorry?
You talked to him?
The broker.
Oh, you talked to the broker? So
yes.
It's not off the market?
So it's off market, but the broker is not on market at all.
It's a pocket listing?
The broker, sorry, mom's calling. Mm-hmm. So the broker gives deals to Raquel when he gets them in, and he distributes them to wholesalers. And so essentially she's supposed to wholesale. I go and do the legwork for her, the boots on the ground. And we decided to pitch one for.
So these are pocket deals?
Yeah.
Is this 100 unit on the market?
Yes.
Yes?
No, no, no. It's not on the market. It's part of the portfolio.
Okay, so it's not on the market.
No.
Okay, talk to us about that, please. Get to that.
Okay, we want to get to that part. Okay, so the multifamily unit is 100 units. It's 5 buildings, 20 units in each building. His rent is running between $375 and $1395. Very low, way below market rate. They all need upgrades. Very minor upgrades from what we see, but we still have to do some due diligence and go in and see exactly what needs to be done, including a possible roof, HVAC, and whatnot. With that being said, the market rent is $22.20 for each unit. That will bring you in $222,000 per building, and that will be times 5 buildings. With the rehab, we calculated $60,000 in rehab per building. That's $300,000. With the investment. And the occupancy is 96 to 99% for the last 3 years. As of today, it's at 99%. There's only 1 vacancy. Thank you, Coach. So I ran all the rules, all of the financial analysis, the gross monthly rent, the purchase price, which I'll get to that. The 2%, we met the 1% rule. The 2% rule, we missed by 15%. The 50% rule came out to $111,000. And our NOI, bottom line is there, $1,332,000. Our annual debt, which is our mortgage, would be about $805,884. Monthly, our mortgage would be $67,000. So it's the annual and the monthly I put there. The annual insurance is $105,000. We calculated that by 1% because it was not given to us. The annual taxes is $125,000. We got that from PropStream and the Fulton County tax assessment records. The expenses we did at 5%, vacancy $133,200, property management 10%, which is $266,400, maintenance and CapEx 10%, $266,400. That will be your 25% that you would take out of the rent monthly per building. We also did the 70% pass. The ARV, $17,500,000 times 70%. And we came up with the $12,250,000. But minus the rehab is $300,000, which leaves you with $11,950, which is not what we're going to offer. That's our maximum allowable offer. And that's with the apartment building, all 6 homes, and the land, the two plots. So our maximum allowable offer is $11,950,000. That's for the 100 doors for the apartment building, the 6 single-family homes, and the 2 plots. One is .14 and one is .40. They are buildable. They have utilities, and they're inland. Come on. So the NI we have, the NOI, the debt equals the end of the year profit, which would be $1,332,000 minus your mortgage, which would be $526,111 on that end of the year, and your ROI, which is 95.1%. It's not on the slide, but it's 95.1%. And our cap rate is 8.55%. Next, you'll have several slides that we put numbers into the calculator that was provided by TLS. Thank you, TLS. So you'll see some of the numbers running here, which you'll see the acquisition cost would be $10,920,000. We will be offering $10,500,000. They're asking $25 million. Yes, they are. Because I stayed up 2, 3, 4 nights over and over. I couldn't find the money. It's the one now because it's laced. It ain't the real thing, trust me. So after repair value will be $18,817,500. So as the appreciation of the buildings each year is 2.6% according to Fulton County, Atlanta, Georgia. You'll see the maintenance fee in there, which is 10%. I went ahead and left some of the percentages that Dereik had originally put in there simply because it just made sense to overthink it than underthink it. And so you have your 10% repairs, your 10% maintenance fees, and then you see up top your 5% for your vacancy. And as you see that this apartment building is really never vacant. I'm going to go down to, Stephanie, we can go to the next two slides. Yeah, there we go. The cash flow projection. It goes from year 0 to year 5, and you'll see that it does increase to $2.7 million on year 5, which is, I believe, is a great exit plan. On the next slide, you'll see the market valuations and the cash flow unlevered and levered. And you'll see the cap rate there at 8.55. The cap. What is the cap rate on? So what is the cap rate on? So the cap rate, I believe we base it off of, I got a lot of notes here. We did the total cost, I'm sorry. That's a ROI, I'm sorry, hold on a second. We did the NOI over the market rate. This here only includes the apartment building. Yes. My apologies. It only includes the apartment building.
So it's going to be, go to the last slide. It's going to be this number, or this number up here.
The NOI.
Over this. So each year, that's going to be the cap. That's how you do it. So 1.7.
I do. Dereik knows all the answers with the numbers. So just based off of I'm going to go down to the next couple of slides. Riding through this complex, this area, if you know Atlanta, a lot of pockets that are booming and popping. This is the Inman Park area where it has a lot of shopping. It has the Inman Park metro station. This apartment station sits right outside the train station. So I sat for a little bit, did some videos and pictures. People were coming off and on. And it looked like college students. The property is well maintained. You can walk to the corner, across the street, you're in shopping. So you got everything you can think of in the shopping area. You're right down from Crocs City Market. You're not far from Ponce City Market. And they're now putting they're doing construction there to include the, what is that thing called? Oh gosh. The Beltline, right. They're putting the Beltline over there as well. So that's an addition which will drive the market up as well. So Raquel and I have, if you don't mind, Stephanie, can I read this last slide, the partnership? Okay. So we add value to the deal because of the value you have added to our lives over the last year, Dereik and the team. Both our lives have changed drastically, and as we feel the investment would add to your goal of 1,000 properties or your investors, whatever number that they have and they're working on, and it will make an even larger impact on the real estate footprint in Atlanta, knowing that you have come to town to take over and turn it to gold. The add value as head of school, I am head of school of a private school, which means that I have management experience. I have conducted weekly meetings with school owners, parents, because I live in Atlanta, and me and my children, Elijah and Trinity, you all know them, that they work tirelessly in the investment arena as well. You guys know my kids. My teens travel with me out of the country when we do investment meetups. My son just bought his first car cash using a whole life insurance policy that he overfunded and paid for himself. So my kids are getting to see what this thing looks like, so they're my partners as well. Raquel Wilson comes with her son Sam, who is also doing the same thing. They do wholesale deals. They find the deals. They have the connections with all of the brokers that are bringing the deals to them, and we actually work together as a team. When she calls me, I move. When I call her, she moves. We work well together. We pray together, and we are very grateful to be doing this deal together. So in doing so, we are asking a total of 16% equity with 2% to our team, in which we will hire whomever we need to help us move forward in the areas that we are not experts in and we need assistance with, such as the team that I inquired with doing this presentation and preparation. And Raquel and I will receive 7% each. So you splitting some of that with the inner circle? Yes. So our offer is 11,185,000. That will be the apartment buildings, including the 6 homes and the 2 lands. And you can see the annual profit would be for the single homes is $144,240. The multifamily is $489,255 with complete repairs, which was the $300,000. So he never put in how much he wanted per house. So we figure we just offer what we want.
Hi, everybody. Looking at Emmett Park, these estimates are completely different than, of course, real life, especially depending on the side of Emmett Park. This seems like it's closer to like the little 5 Point side, not the other side that's completely transitioned, of course, completely gentrified. So I would take these numbers down a little bit of a notch, especially being that a lot of these sales from 2021, interest rates was much lower. So a lot of these are inflated. So when I'm looking at, just for example, 1,076 Hardy, just at first glance, if your offer price of $100,000, if you're coming in as a package, I would bring that down to like 80. Yeah, for sure. And let me tell you why. Because you're coming in at a full package deal, and you already know that there's a lot of deferred maintenance here.
Yeah.
Same thing. Flip it over again. Come on now. 100 Kensington. I took a look at this one, right? Your offer price at $165. I would just bring everything down about 20% on these offer prices, because he's selling it as a portfolio for a reason. There's a lot of deferred maintenance here, and it's just like you're coming in at the beginning of when y'all remember how the West Side Atlanta was, when you could buy a $5,000 house in 2007. Now it took a while for it to transition. This is this side of Emmett Park, even though it is still considered Emmett Park. You're not quite on the other side of the tracks where they have already gentrified. Okay. So I would come in below on that number and account for that, because what you want to do with this, we're going to sell them, want to rent them.
Yes.
Okay.
Actually, it's what you guys want to do. I'm partnering with you. So I would say that
I would want to keep them.
I would buy and hold. That's exactly what I thought you guys wanted to do. So
yeah, roll it into the whole
package
portfolio.
it as though you were going to buy and hold it. Yes. Yes.
Absolutely.
Let's go.
I think everybody up here is excited.
Let's
about this
go. Are we working together or are we splitting?
We don't know yet.
Okay.
We're gonna make an offer. They may make an offer. We may collaborate.
Okay.
All right, so
Can y'all call Raquel?
all right. First off, 25 million is criminal.
Yes, I agree.
I don't have to know anything about Emmett Park to know that. And why? Why? It's because valuations for commercial stuff like this is based off of net operating income.
Yes.
And the maximum net operating income you can get off of this, you said, is $22.20. I would want to trim that number back because after hearing what Quaina said, I think it probably needs to dial back a bit. But even at $22.20, the maximum valuation, like market, is about $8 million. Now, I want to buy into equity on something like this, so I'm really closer to like 6.5. To have some wiggle room. If I'm being quite frank with you. Secondly, I'm not interested in any single family. Now, again, Quaina said people sell portfolios for a reason because it's like mortgages being sold before pre-2008. They would sell them in tranches, and you've got different grades of mortgages that average a certain grade. But, you got a lot of crap in here, and the crap is what defaults, right? So it's the same thing with real estate portfolios. I don't want to buy the crap. I just want the multifamily. Now, there may be a case where there's like, nah, it all has to go at once, and at which point we can maybe talk about that. But I would say reasonably, for everything, we would probably be in about $8 million in terms of the ownership structure. This is a thick, big boy deal. So the GP LP structure, the general partner limited partner structure, is a lot more complicated than just the flat 16%. The rest to LPs, far more complicated. At the end of the day, your compensation for operations, we can have it structured in a way where it still makes sense. Some of it will be front weighted, some of it will be long term, but it'll make sense towards the effort that you're putting in. So I'm not saying yes or no to the 16%. We're saying yes to $8 million to that offer, and we will sort the ownership piece out in a way that makes sense. That's our offer.
Thank you. Appreciate it.
I agree. I like it. I'd be interested in potentially partnering on this one as well. But definitely that cost will have to definitely come down. That's great. My offer?
Dereik don't like no partnership. Jeez. This is the one deal we was like, I think we all want to come on together. We could be a team. Okay. Power partnerships, isn't that what I said?
Yes. Partnership is gold.
So, I guess the real question is, what's
We got cash. What we doing? Nah, that's it for me. I like it. I've been talking to Dereik the whole while, and I would like to partner with y'all on it, whatever y'all want to do. I'm in on it.
Okay, so you'll take the single families while Dereik and...
Don't worry about that. We'll negotiate
Okay,
that.
gotcha.
Yeah.
Okay.
We'll get that, yeah.
Because you can always knock down those single families and make them duplexes.
If they give us if they take the $8 million, we taking it off.
Yeah.
There you go.
We'll take it off, right?
Yeah, and like I said, with single family, you can dump them off easy. Hate to say it's easy. They're easy
Yeah.
to sell in Atlanta.
That sounds good. Is that it? Do I have any more deals?
Yeah, the equity. So
Yes.
Dee was gentle with that. I'm using no Vaseline.
Okay.
Yeah. So, yeah. So, what that means, right? Y'all just got bad thinking. Now we know what I mean, right? But what I'm telling you is this. I think it's so beautiful that you're including your family, but it can't be at the cost to the investors.
Okay.
So 16% is extremely a lot of money on this deal. Are you guys bringing liquid for that 16%?
Sweat equity.
Okay. I appreciate the sweat.
Right, the sweat.
But that's a whole lot of people sweating.
Yes.
And a whole lot of other people being brought in to sweat.
So, what's your offer?
So if we do this deal, and so what we're talking about is us bringing millions to the table.
Yes.
Right? So we're not talking about, a few $100,000 or anything like that. I'm not interested at 16%. I think if you guys want to charge an acquisition fee of 10%, I would be okay with that. I would look at bringing you guys on for 2%, maybe 2.5% of equity, but that's going to require you to be able to bring some type of service to our general partnership because everybody has to do something at the table.
Absolutely.
That's the offer.
Absolutely. Okay, so you said acquisition. Excuse me, my partner's on the phone. Hi, Raquel. Did you did you hear the offer?
Yeah, put on speaker.
Okay, hold on. They want you on speakerphone.
Yes.
1 second. How do you do the speaker? Oh, okay. Go ahead, Raquel.
I'm shaking in Nebraska. We initially, hi Coach, hi Derek. We initially said 2%, Coach. So I totally agree, and I'm just happy just to be named among you. I'm grateful.
So y'all need to get to work.
Yes.
The 2%, let me help y'all out. The 2% could be y'all getting us that deal at the $8 million. That's a lot of work to do.
Yep.
Okay? So, I mean, you're going back into the wilderness to fight with the seller. I can guarantee you, after due diligence, I would be interested in that deal. Yeah.
Yeah, I think I'll help you with this part. So 100%, the owners need to send financials, and they can do that. We can sign an NDA.
Okay.
But, you know, I don't know how patient they are with this, but when someone wants to dump something like this, it's either just because they see a sell opportunity, they're trying to get somebody, or they have a desperate need. And if they have a desperate need, then that creates a big opportunity for us.
Okay.
And you're not just getting one shark. Like, who's in? Marcus, you in? Your team in.
Marcus in.
This is your opportunity.
I don't know. This, you start talking 10 million, I'm like, yo, y'all gonna have to do the numbers. I ain't even gonna play with you and act like
We're not playing. We working.
Make it make sense.
Yeah. We buying income.
We
for
working.
sure.
We buying income. So I've been in the program for over a year, and the work that Raquel and I put into this project to prepare for today was, I got an hour's sleep. We did an all-nighter.
shows. It
We did
shows.
all-nighter.
Very well presented.
Great presentation.
Thank you.
Excellent presentation. And I just wanted to kind of chime in. Before I even got into this, I was in property management. I used to manage like 400 units, 500 units, and I would have to do these reports for our investors, and they would come and walk when we were selling property. So this is extremely thorough. And of course, like I was telling them, of course, they'll tell you anything. Like you said, you need to get the financials. I was on the other end as a property manager. When we were selling, my job was to make it appear to be 99% and 98% occupied. I was very good at my job because I definitely wanted my bonus. But you are going to have to walk every door.
That's good.
Absolutely. I have the rent roll here too. If you guys
Okay.
want to have it, we have the rent roll.
I know how to make those look good this way.
Yeah.
Okay.
You're going to have to walk every door. It's
Gotcha.
going to take a lot of due diligence.
Will do. And that we will do.
And make sure when you're getting those rent rolls, you also ask them how many writ of possessions they've actually normally filed per month, how often they're collecting rent, and how on what. Because typically on a large property like this, they're probably doing about 15%, on writ of possessions, and most people are probably in default.
That's
so you
so
want to
bad.
check on that as well.
Okay.
You got a whole team.
Another thing that I would say, I'm always about.
Writ of
Evictions.
possessions.
It's evictions, but it's a writ of possessions, and when you can see that they have to file it, especially for Atlanta. It's going to be filed, and you can go to the magistrate's
Okay.
office online for Fulton County,
Yep.
and you can see how many times they're filing writs because again, rent rolls can be very deceptive. But you want to understand that's how you can see. Of course, we're going to see it's 99% occupied. That is your job to sell a portfolio.
Absolutely.
I'm used to doing this. I did this for 6 years.
Okay. That's good to know. I appreciate that. We will do that.
And another thing, I mean, before I got into development, I was a licensed PI. And so I think it's important when you go to these properties, talk to the people.
Okay.
Talk to the tenants that are there, talk to the neighbors, get a sense overall as to, the story behind the property. if there have been any significant, issues with the home, issues with the tenants, how is it dealing with the landlords, have they been maintaining the property? They can say whatever they want. They can come up with whatever receipts, this is the maintenance that's been done. But go and check. Bring a contractor with you
Okay.
who can walk through the property. Oh, look, the furnace is this. Check out all of and verify a lot of the conditions of the home.
Okay.
So just taking that extra step and really being investigative when you're doing the walkthroughs.
Will do.
Okay.
Thank you.
Y'all clap it up for Investor Tank. All right, so guys, this is what we'll do, okay? For those of you who's asking to attend PC Live and the 5-day virtual property challenge, you like BBB, right? Yes. Find Steph. She's going to lead you guys to the website so you will be able to get your tickets. It's 2 events, and I'm giving away 2 houses this year. Last year, I gave away 1 house. This year, I'm giving away 2 houses with your ticket purchase. You have to do nothing other than buy a ticket and be in the room. Tickets start at $97. $9.97 is the titanium. You're spending 5 days with me. Along with those 5 days, you're also attending the in-person event, titanium at the main level, so you get 2 for 1, and that same ticket enters you to win investment property with us. Okay, Stephanie, raise your hand. She's the white girl right there. All right. Yes, for everyone else that's in here, if you still got time, just get up, go meet somebody new, go talk to somebody that you do not know. The inner circle is here. All of our ambassadors, please stand up. All of our ambassadors are licensed by the TLS program. They are qualified to be able to answer your real estate investment questions. They're able to, I'm only one person. This is why it's called multiplication. Okay, so they are able to help you guys and assist you with all of your real estate questions. Thank you so much. Thank our sharks for coming to spend hours with us today. I pray that you guys have found value in this and would attend me in. I know Kiana's going to be with me already. I would love for each and every last one of y'all to come back to PC Live if you guys are available and to be able to participate in the big tank. Yes. Thank you guys so much. We have questions, Steph. We have questions. Also, can all of the sharks tell everyone how to find them, how to follow them, and get involved with that? Hold on, I'll start with you.
Man, this was amazing. This was so amazing for me as I am embarking on a journey. He mad because I got more property than him. He mad. So I'm proud of everybody. Again, that was a great presentation. I'm proud of what it took to get up. I know it ain't easy to just get up here and speak. You know what I'm saying? So I'm proud of y'all. But it's Wall_Street_Trapper on Instagram, Wall Street Trapper on YouTube, and Trapping Tuesdays on all podcast platforms if you're trying to learn how to master the stock market. You hear me?
Wall Street Trapper? Yes, sir. Yes, ma'am. With an A or with ER?
All right, Dereik, you can find me, of course, at Property Challenge and PropertyChallengeLive.com. Also on Instagram at Dereik Go, Dereik Go.
Demetrius Walker, you can find me on Instagram, Meet the Emperor on Instagram. I'm here, and anybody got any questions, I'll answer before we leave out.
I'm Quaina Watson. You can find me, Quaina Watson, on all platforms. Typically, I focus on selling luxury real estate. However, I am working on launching my own development company, and I'm excited to share more of the intellect that goes behind the deal, because I know I can make luxury look real easy, but there's a lot more that goes to it, and I hope you guys kind of saw that today. And really congratulate yourselves for being a part of this platform and really taking this seriously. This is going to be life-changing for you all. I'm excited to be with Terica again, and really just, congratulate yourselves again for just being here and showing up. That's the hardest part. QUI, ANA.
I'm Priscilla Facey. You can find me Priscilla, Priscilla, Facey, Face with a Y, on all platforms as well. And I want to commend all of you guys as well, because number one, first of all, Terica's put this together. I spent $30,000 on university. There's more in here than you guys are gonna get there. Not to deflect anyone from going to school, but there's just so much value in this, and this is real life like preparation. Like this is real life presentations. You guys put in work. So congratulate. Feel good about yourselves for that.
Amen. How do we find you?
Priscilla Facey, Priscilla.
Mine is simple. Him 500. HIM 500. No underscore. It's easy. Simple to the point. HIM 500. Y'all can tap me on all social media platforms. Let Trap do it. He the one. He want to do it. Let Martin Leon King do it. MLK Jr. over there. He long-winded. Now listen. I teach entrepreneurs how to leverage credit and fund yourself from your own wallet, which is something that's super important. And I think that these are things that we start to learn after, right, through experience. So I'm not going into super detail, but it's just things that we have to be creative about. And it doesn't start, I usually tell people go in depth about credit, but the biggest jewel I can give you is learning how to actually monitor, how to budget your money, control your finances, right? You can't be successful without it. So learning, honestly, create a budget, learn how to strategically, never mind, Trap up here. I'm damn near gonna have to get spicy in a second because he gonna go next. All right, so, boom. One thing about it is like this, right? A lot of you guys came up here with deals that you should be able to fund yourself. And so when you come up with a deal that's $25,000, $50,000, you should understand that, okay, I can go to different banks and understand how banking institutions work. So if you understand with different banks that banks pull from different bureaus, right? And a lot of times that we don't realize that you may have one strong credit, one credit report that's bad and two that's good because you get a late payment or you got one derogatory mark that you just can't seem to get off. So we start learning how to actually go to institutions that pull from one credit bureau. So what I teach people and show people is that, hey, listen, Truist may pull strictly from Equifax. You got another one like Alliant that's going to strictly pull from Experian. So what you now know is that I can go to them and they won't know that I pulled from the other one. So I can go and get a bank product. The key is that we go to like credit unions because when you go to a credit union, you can get a line of credit. You also can get a credit card, but you only get one inquiry. So now I went to Alliant and I got one inquiry, but I got two bank products. So let's just say I got a $15,000 credit card and a $15,000 line of credit. That's $30,000, one inquiry. I do the same thing when I go to another bank that's going to pull from Experian. This is how we start to kind of credit stack and understanding these things, right? And the reason why we do this is off of our personal though. So on the personal side, and the reason you go to credit unions on your personal side is because they're going to give you larger lines and larger limits. That's not your funding money. That's not the money that you use. This is where a lot of people make mistakes and think that this is what I'm going to invest with. That's not the money that you use. That is your seed money. That's your seed proof to go get business credit. That's the thing. Okay, I'm going to have these lines of credit sitting on my credit report to show the banks that I can manage my money. I'm not strapped for cash. The best time to get credit is when you don't need it. So they understand that. Well, we know if I go get a business credit card, they're going to give me three times what my personal credit card limits are. Well, that's why we go to credit unions, because they're going to give us larger limits. So you're going to go to credit unions, get larger limits. Then on the business side, after you let these sit 6 to 8 months, make sure you maintain also your balances that sit in your checking and savings accounts. Don't just have it where it's like, yo, I got a checking and savings account with a banking institution and I never put money in it. Let it sit at a 500 to 1,000 average daily balance. Y'all trying to build wealth. This ain't the struggle game. So y'all gonna have to play with some money, leave at least 500 to 1,000 on a daily balance in these bank accounts, okay? Now when you go on a business side, you go into the Chase. Now you go into the American Express. But you must understand why you're using these banks. So you have to do a little bit of research and see, okay, if I'm going into real estate, what's my benefits and perks? Does the perks and benefits of like my reward points come from Home Depot, from these type of purchases? Don't go get a credit card that has the perks and benefits for shopping. Or we're gonna reward you for buying groceries or travel, when you know you're going to invest in real estate. So you want to look and say, okay, who's going to give me the most reward points when I go out and I go shop with Lowe's, when I go out and I go shop at Home Depot in certain stores, because I can use those reward points as well to reinvest and kind of cut down my profits to make me more profitable. That make sense? Yeah. Y'all follow me? Yeah. Okay, but the reason why we go business side later is, make sure you stack the credit unions first. Y'all follow me there? Stack the credit union so you can have larger lines. So when you go into the business side and you go apply for business credit, you get larger limits. And that's the money because then it does not show. And you're going to use that same sequence of, okay, what bureaus do you pull from? One thing that you can check credit boards, things like that. And another hack is get into the Facebook groups of the banking institutions. Get in the Facebook groups. Why? Because that's where people are going to tell you, okay, I'm in Kansas and I did an inquiry with Chase. I did an inquiry with Bank of America and they pull from this bureau. If they say they pull from all three, eliminate it. You don't want to do it. But if they say, okay, they're pulling from this bureau, this is how you stay up to date. It's not just checking blogs. You go into their Facebook groups. A lot of us don't utilize those. Get into the bank's Facebook groups where all the members are, who's complaining, who's telling the truth, and who's giving praise. Because now we're going to actually be able to learn real time of what's happening now. So this is how we stay in tune with what's going on. But we just want to have that mindset is this. That's how you get the money. But the foundation of budgeting, money management, your bookkeeping, not living above your means, keeps you out of debt because you have to be disciplined. Discipline is the key. Like when it comes to analyzing these deals and everything that's going on, the discipline is key. It does not matter how much access to capital you get. Without discipline, you're going to lose. You will lose 100% of the time, every time. So just be disciplined, but always learn how to maximize these banks and how to get the most from them. And I'm going to finish with this. The month of May, I did $35 million in business over the last 4 years. The month of May, my goal is to put $35 million back into the hands of people who look like me and people and small business owners. So we're doing funding all month, and that's my biggest campaign right now. We're doing a month of millions, and we're looking to fund and help you guys get access to capital, trying to fund $35 million back into our community. So I'll make sure y'all tap in me on that.
Okay. Question from the crowd? Was that everybody? Yes. Okay.
Good afternoon. Thanks for having me. My name is LaShonda Collins. I'm from North New Jersey, so I came 13 hours once I got this text. Just for this question. I was willed 3 properties, so in order for it not to be a burden, I need to liquidate. I'm in a mastermind already with ET. I'm with Jamal King. I know how to do certain things, but they don't know this stuff, far as investing and taking your assets that was given to you, and turn them into liquidation or not sell. So I have I was in Jamal King's group. I'm still in Make Real Estate Real. I'm calling names. I love it. But they were only doing properties in Chicago. So I was in a group, so what he was doing, it doesn't help me because I need to steward over what I have. I'm a child of God, and I know I have property in North New Jersey. One is a raw land, and one is a 2-family with a basement. It's an abandoned house right next door. I've been trying to get the land bank, so they didn't want to give it to me. It's a $1 million home that just was built across the street. My house that I live in now is a 2-family. It's worth $600,000, and I have a $200,000 mortgage on it now. I owned it outright. I got in the wrong deal, possibly, so I fell forward because I still have it. I have raw land that's next door that we can build on. I would like to get in a deal with somebody that I can partner with, possibly build on it, or if you guys tell me I should sell. Don't know. I just came here to ask a question, so I know what I do. I spoke to a realtor. A realtor told me once they ran the comps in the neighborhood, don't sell my 2-family because I can get $2,000 per floor because I turned it to a 3-bedroom each floor. I fixed it up to the max. I don't have heating and electricity that I would have to upgrade, but I only owe $200,000 on it, and then it's mine outright. So that would be $500,000 that it'll be mine. We could do whatever. I would like to turn it into a transitional home because I can get Section 8. My grandparents took care of me and took me out of the system, so I would like to take other kids out of the system. I work with children that's sexually abused also, so I know it's a need for it in my neighborhood. It's 2 schools. They building up in Newark. They just built a house in across the street for $900,000. They have a building that they building up as a condo. It used to be the projects on Elizabeth Avenue, but now they building that up, and they have a movie theater that they're building, not a theater, studio that they're building on Freela Heisen Avenue.
Okay, so let's talk about the deal. So first, I never like to give coaching over someone coaching program. Okay, so that's my first thing. I always, because I do know, like, first, E is my speaking coach. That's who taught me how to speak publicly. Shout out to ET. Secondly, I don't know about the real estate program, that they have. So what I don't want to do is give you information and then you go and say to your coach, so he told you to come get help?
I sent him. He told me to get help. I need a contract.
Okay, perfect. So everybody heard that? Okay, perfect. Okay, all right.
Yes.
Thank you. Okay.
Yes. No, I don't have a problem with asking for the things that I need.
Okay. Perfect.
I need something. So.
Okay, so, all right, so since that's clear, I just want to clear that
it
up,
was
right?
clear.
Okay. You said you have 3 properties.
Yes, I have one in South Carolina also that's dormant for 16 years, but I would like to fix it up. I'll go visit it, and I'll put VA or somebody else in there.
Mm-hmm.
Sure. Yeah. And
Okay.
I own them outright.
Okay.
That one
So,
too.
all right, so you own that one outright.
And the Royal Land
What part
outright.
of South Carolina?
Latta, South Carolina is not far from Dillon. It's worth $30,000.
All right, this is a funny story, right? I used to live in Dillon, South Carolina.
Okay.
Yeah. I also lived in Newark, New Jersey.
Oh.
Yeah. Yeah. So, Dillon is a very small county. Not much going on over there. All right. Newark, on the other hand, is a lot going on over there. So this is the thing. You said you wanted to do a whole lot with these properties, so we need to go ahead and scale it down to what exactly is going to be the highest and best use. So when you take a look around the community, what do you see? Do you see multifamily developments or do you see single-family homes?
They're building multifamily all around the neighborhood.
Pause. Multifamily. So that's the highest and best use. So as an investor, I'm always looking for the highest and best use of the property, meaning how can I make the most money from that property? So right now you're saying it's going to be multifamily.
I can build on that land. It's rural land.
All right, but I'm talking about the one you live in and the one on side of you.
Yes.
Correct?
Yes.
Okay. The one you live in right now is a duplex?
A duplex. Upstairs and downstairs. I don't know if that's a duplex.
Do it have 2 exterior entrances?
Yes.
Okay, so it's a duplex.
Okay.
Okay. So can you put one person in one of the units coming from the exterior and not access the other unit? Or do you?
Yes.
Okay. So there's cutoff access. There's a shared wall in between that
Yes.
property. Okay.
Actually, I have multiple doors. You can go either way. You can lock it and close it because it was a family home for 47 years. But we can close it and come through.
Okay, but we should be able to cut it off.
You
right?
can
Close
cut it
off.
off, yes.
Okay. Perfect. All right. So you have 2 units. Each unit can rent for $2,000 each. You said.
Yes.
Okay. You live in one.
Yes.
Okay. You want to stay.
No, I don't.
Okay. You okay with leaving?
Yes, I am.
Okay. But you're okay with staying?
I'm okay with staying for the calls, and if we got a building, I got to sit there and watch. I lived there all my life. I don't have a problem with it.
Okay, perfect. So what I would tell you is this, right? I would apply for a HELOC.
Okay.
Okay? You have so much equity in your home. The best interest rate you're going to get right now is through a HELOC, a home equity line of credit. I need you to write that down because I'm not talking for free. So then the second part about that is that with your HELOC, right? Once you go and apply for the HELOC, that is a bank account against your house now. Okay? So when you open up this HELOC, you now have 80% of your equity sitting in a bank account that you literally can cut a check for now. Okay? So now what you're going to do is you're going to take that HELOC, you're going to go ahead and fix up the house you in. Just use $10,000 to $20,000. From what I heard, you already started doing some stuff. Close the walls off. Make it a true duplex. Nobody want to be opening up a door to come into somebody else's house, okay? Rent that unit out for $2,000. Allow that $2,000 to pay for your HELOC every single month. Take the money you're going to draw from your HELOC and go build another 4-plex on that residential lot. You're going to build 4 units now.
I'm going to, the lot size, I would have to build up.
You're going to build 4 units. Write that
Okay.
down. Yeah. Yeah. Because no matter what, you can put 2 at the bottom and 2 at the top.
Okay.
You see what I'm saying?
Yes.
I need you to get the highest and best use. So I'm talking to you, say nobody gave you the game. So I need for you to keep up. So now you're going to have 6 doors. You see what I'm saying?
Yes.
But guess what? Your HELOC is paying for the construction and the cost of that build that you're going to do next door. So what you're going to do is you're going to take that lot, you're going to go pledge it as collateral. You don't have to put no money out of your pocket.
Okay.
The bank is going to say, yes, I'll give you 80% of the value of that lot. How much you think that lot is worth?
It's worth now $300,000.
So you're going to get 80% of that. You're going to be able to build your quadplex with that money. But you're still paying the note from the HELOC.
Yes.
From your tenant.
$2,000.
Yeah, and you still live in there supervising the project.
Yes.
When you finish, how much rent can you get per each unit? If it's 2 bedrooms, 2 baths, because it's a duplex.
Okay, 2 bedrooms, I'll say $1,500.
You say 1,500 or is it 1,500?
$1,500.
Okay, so 1,500 times 4.
6,000.
Okay, so 6,000 plus the 2 you already got in, you're going to be making about 8,000 gross.
Yes.
Is that what you want to do?
Yes, it is.
Thank you.
Thank you.
And I'm tired.
Hi everybody, my name is Kiera. First and foremost, I want to thank y'all for taking time out of y'all schedules to host this. This was absolutely amazing. So somewhat of a similar situation. So my mom, I inherited 2 properties from my mom. They're here in Georgia in the city of Smyrna. So I am on they were quit claim to me. So I'm on the deed. We didn't have to go through probate or anything like that. However, yes ma'am. And yeah, she has a property also in the Virgin Islands. That's where she was from. So that property and the land, no, it's not. But they have a very nice view, and they're both. It's 2 levels and separate entrances as well. And those houses have been paid off for like 40 years, but they need to totally get torn down. No, that was quit claim to my uncle. However, right before my mom passed away, she went out to the islands and she was looking to Airbnb and get it fixed up. So that is something that my uncle is still open to doing. But long story short, they both have mortgages. The homes here in Smyrna, I'm not on the mortgages. So on one property we have. I'm on the deed, but there are balances, so I'm not on the mortgage.
What are the balances?
What are the balances? So on one property is $204,000, and that value is $453,000. So it has about 200. I have the numbers here. So the first home is a townhome. It is valued at $430,000. It has $226,000 in equity. And there's another property that is valued at $753,000, and that property has $340,000 worth of equity. The issue, she refinanced both of them in 2021, so one interest rate is 2.875%. The other interest rate is 2.8, and then we have another one for 2.9. So the other property, I have about $340,000 worth of equity. However, because I'm not on the mortgages, I can't really touch the equity. And so my question to you all is, one mortgage is $1,600, the other mortgage is $1,800. I would like to tap into some of the money to invest and get other real estate. I'm a former cosmetologist, so I would love to get some salon suites here in Georgia. So I just want to get y'all's advice. I know that those interest rates, I probably never get them again, but that's also almost $600, my mom's.
You want to say something?
What I was saying is, of course, I mean, she did put you on the deed, but you're going to have to, in order for you to have the right to kind of take over those properties, you're going to have to take over those mortgages. Now, you could sell them to yourself.
Okay.
There's an option for you to sell them to yourself.
Okay.
And by doing so, you can finance that. And if it has the right type of interest, depending on the mortgage servicer, you know that you can actually take over the interest rate as well. So you don't have to come in at a new interest rate. You need to contact the mortgage servicers because they're very specific to see if you're able to transfer over that interest rate. You can sell these properties to yourself if you have the income. That would be one way. One way to sell the property, keep the interest rates, and pull out the equity.
Okay.
I would think that would be the easiest way. Other than that, you would have to put it on the market, and then you're getting rid of the properties.
Right.
So if you're in the position, and maybe the lowest cost one, I would write that down. Listen, I'm about to be like Terica. Write this down. I'll talk for free.
I'm recording. If that's okay, I'm recording.
But for sure, definitely do look into that. But you got to contact the mortgage services first. Every mortgage servicer does not offer that service, but if they do, keep those rates. Position yourself to purchase them yourself. Even if you have to do like more of a bank statement loan or an entrepreneur loan, you can put 20% down. But again, check into the rates.
Okay.
Because that would be the only way it would make sense. Now with rates being at 7.75, you would literally, I would choose the lowest cost property. If I were to sell it back to myself at that interest rate, pull the money out, open your salon suites, hold on to the other one, and then position yourself to go back and get the other one.
Okay.
I was going to say some of that, but I would also say make sure you have a backup plan just in case you do reach out to the mortgage company and they try to call a note or something. You don't want to be left stuck. So just make sure you have a backup plan on how you will finance it just in case they want to call the loans. Because your mom is deceased.
Right. I do
General
understand
questions.
that. Okay.
General questions. Not,
Okay.
Don't say my
Yeah,
mom.
I know.
I just wondered.
No. And that's, I'm like.
There's no real ownership when I visualize this transaction because you can't go refinance it. You would have to call the lien holder to tell them that the person is deceased. And then there's a process that they're going to have to go through for the person that's deceased. So just because they can ask you if you want to qualify for this debt and maybe allow you to assume the terms that they have, but it's very dangerous for you to even dabble any money into this without full ownership because at any point in time, if they call that loan, you don't own it. You see what I'm saying?
Yeah. Okay. I know for a fact one of them is not assumable because I did find the paperwork and it said this loan is not assumable. Okay. So I know that for
Well, in the case that someone's dies, it's not it may not be assumable if that person is alive and they want somebody else to take over the mortgage.
Okay.
But maybe the heir of the estate, that's why I was asking you, was this in the trust?
Okay.
But maybe the heir of the estate can assume this into the trust. And maybe they would allow it to go from there. But go ahead.
I was just going to say, when you call, you don't even have to say the property address. You can try to just get this information from them to see their process and how it works so you don't back yourself up against the wall and open up a can of worms prematurely.
Yes,
Okay.
that's good.
In the event that I need to sell because it is almost like $600,000.
You're going to have to do a succession.
Okay.
There's no way around that. You wrote that down?
I have it recorded.
Okay, perfect. The succession, you're not going to be able to collect anything from that. They're going to put that up in an account that's going to be held by the state.
Okay. I spoke to a probate and a closing attorney, and they told me because they were able to search the records, and they said because I was on the deed that I would be able to sell.
Do you have brothers and sisters?
I do.
They can too. That makes sense?
Yeah.
I'm not trying to argue with you, baby.
No,
you
no,
may
no.
know more than me. I'm just telling you from 20 years experience of what I've seen in family fights. All of the heirs have right to that if they're her children.
Okay.
You see what I'm saying? So
Yes,
just
ma'am.
because she deeded it to you, because there was no, was there a will
Yes, there was.
recorded?
I don't know if it was recorded, but I
These
did
are
find one.
right. So these are things. Yeah, these are things you're gonna want to search because if she willed it to you, it'll be a different conversation. If it's not willed it to you, your siblings are have ownership rights to this property.
Okay.
So I'm just, you gotta, if you don't ask a probate and or a title attorney the right question, no offense, you probably asked them what you knew.
Mhm.
But if you don't ask them the right question, they're gonna answer the question that you asked them.
Right.
But the right question would be the true ownership and if there's any heirs. And a good probate attorney would ask, are there any siblings?
Okay.
Even a husband, And if she acquired that property, depending on your state law, but like in Louisiana and some of the other South states, we're common law. So that means community property. That means that
Same for Georgia.
It's same for Georgia?
Oh, yes.
Yeah.
Everything that
So everything that's acquired in the marriage is 50-50. So then if that spouse, that husband have children and he passed away, they may have an ownership claim to the property as well.
Okay. All right. Well, thank y'all.
Yes.
And then look at are you on the deed as joint tenancy with right of survivorship. Make sure you look into that as well. Make sure that you have a very clear understanding of what that is. And if you just look me up, my real number is on my Instagram page, is my business number. Send me a text message. I don't mind helping you with that.
Thank you.
For sure.
Look at you.
Because I do have enough. I deal with a lot of complex deals, so I do have enough people on standby that can help you, especially if you're like, listen, I want to sell this property and I want to invest in another business to really build my own legacy. I can assist you with that for sure.
Thank you.
All right, we are going to shut it down because we are way over. Thank y'all so much. I know, I'm sorry. Thank y'all so much for coming. Thank you, thank you, thank you. And if you want the website to purchase tickets for Property Challenge, see me. Y'all have a great night.
Thank y'all.